All right, good morning, everybody. Let me make sure my headphones are on so you're not getting the echo. How's everyone doing today? Looks like I am connected and good. And guys, Discord seems to be trucking along today, so hopefully no challenges. Good morning, Jim K. Mike M, nice trade. Oh, Mark's just hanging out, looking at patterns, trying to be smarter than he was yesterday. Hopefully you guys do the same thing, right? It's good to see you guys. Dwight, good morning. And Saya, Sydney, Ron, Surgeon, T45, Mike M, Jim K, Walker, welcome to the room. Snorri, nice to have you back. Hopefully you're not traveling today and you can play a little bit. Daniel, Dr. P. Dr. P, did you get all your charts squared away yesterday? I hope. Adolfo, nice to see you. M, man, everybody's jumping in. Awesome. Good stuff. I was thinking about that yesterday at about 7 p.m. my time. I was like, I wonder if he got everything squared away. I sure hope so. Hey, good morning, Jose Trades. Nice to see you. All right, guys. I'm pretty stoked for the day. I'm excited for the day. It's Wednesday. Yesterday afternoon, I don't know about you guys, I watched the market for hours. I didn't get a lot of rules-based trades. All I trade is NASDAQ. And I sat on my hands for, hey, good morning, Adolfo. I sat on my hands for almost 3 hours, guys. I had one rules-based trade and it didn't go all the way. And some days are like that, right? Hey, good morning, Chef. I see you sneaking in here. Cameron, good morning. Um, and some days are like that. What we do in here, guys, we're chart readers, right? We're chart readers. We're waiting for advantages. 90% of your day is going to be spent looking at your charts. It's just going to be waiting for an advantage. And we're going to spend the better part of the first hour, morning chef, talking about those advantages, recognizing those advantages, making sure that you understand what your indicators are telling you. And what happens is when you focus on believing in the advantages, you begin this thought process of my indicators say, rather than I think. My indicators say the market is going down, rather than I think it might reverse here. So it becomes this awesome process where you can begin to eliminate challenges through the recognition of advantages. And that's what we're going to do today. And the first advantage that I always give myself is making sure that I know when news is going to print, guys. So I do this every morning. Forexfactory.com/calendar. Steal this one. Make sure that you're looking at it. Indicators good, thinking bad. Amen, Ron. That's exactly right. Um, my opinions rarely serve me well, guys. And I find that in this classroom, your opinions rarely serve you well as well. So let's check news. Today's Wednesday, September 6th. Can't believe it. At 8:30 a.m., there was trade balance. Didn't do much to the market. It was a low impact news release. Always great to be aware, but really weren't concerned about it. There's nobody going, oh, the trade balance. I'm going to sell 1,000 contracts if it's not a good number, right? But at 10 a.m., ISM services, this is a high impact. This could make that market spike, jump, bump, reverse for no warning at all. So I'm looking for these red boxes. I'm looking for these orange boxes. High impact, medium impact. I have zero concern for what the release is. It doesn't matter to me, guys. I'm not a news guy. I don't watch the news. I don't listen to the news. I definitely don't trade the news. I trade indicators. And if my indicators say it's time to take a trade, then I take the trade. So that's the first advantage you can give yourself is making sure that you're comfortable and capable getting to forexfactory.com and identifying these red and orange boxes to give you that warning hours ahead of time that the market may go a little crazy. Everything that I talk about comes from the nexgent3.com education page. And one of my favorite things is there are no secrets with Nexgen, guys. We are in a constant process of trying to make this as easy on you as we possibly can. If you started Nexgen 5, 7, 8 years ago, you probably come into this classroom and go, oh my gosh, these new guys have it so easy. And it keeps getting better all the time. And if we find a way to do it better, then we share it with you. But to be honest with you, it has been the same methodology, the same fibs, the same patience piece for the last 25 years. The looks are just a little bit same because technology moves forward. Um, so everything is on this page. Your software user guide is going to be your NinjaTrader how-to. So for you guys that are brand new to NinjaTrader and you're curious about scaling charts and you're curious about setting up stops and targets, good morning, Sydney. You're curious about what else? Changing the look of your trigger lines. If you're one of those people that needs to tinker, right? Adding symbols, rolling contracts, applying templates. All of your answers are right here in the user guide. But I'm going to encourage you guys. Hey, good morning. There should be. Guys, give me a Y if you can hear me. I want to make sure it's not just Sean. Cool. Awesome. So we'll see if we can get Sean to reboot so he doesn't miss anything. Um, If you're brand new with me, so this is, Chef, Dwight, Sydney, all you guys that are kind of just now coming out of the gates, go through NinjaTrader and try to break stuff, right? Knock your charts out of whack and learn how to get them back. Ask questions in class to get them back. Um, and then do me a favor, everybody open up their TechSmith capture. If you're brand new, especially if you've never posted a picture in my room before, open up your TechSmith capture software, guys. This is going to be the easiest tool that you will ever use. Your charts disappeared, Chef? All right, may have been a NinjaTrader 8 issue. Um, So let's start with this, your NinjaTrader 8 best practices. Every morning, this should be how you guys start your days. You should be able to just reopen, relog in, Chef, no worries at all. It happens sometimes. NinjaTrader 8's a little fickle with the software every now and then. Sometimes it has bad days. I don't remember the last time I had a crash, and my computer's not that great. Um, I tend to not draw on them or scale them too terribly much. Guys, this capture software is how we're going to have a conversation. And I like to do just a little tutorial. So if you've never taken a picture with capture software or you're still curious about the bells and whistles, it's pretty simple. It's a big red button that says capture. I'm going to click on it, and if I hover over just one chart, it's going to show me just one chart. It's going to give me a picture of just one chart. So the best thing that you can do as a brand new user is left click in the upper left hand corner and drag it all the way down to the bottom right. And I want you to make sure that you get your timestamps in there because we're going to compare between the large chart and the small chart. And I'd like you to get the prices in there as well because we're going to do that comparison between small and large charts. When I release the mouse, the option it's going to give me is that capture an image. I'm going to capture that image, and when I do, my image preview is going to come up. And this is how you and I are going to have a conversation. This is how you're going to get feedback on everything that you see. You're going to get feedback on everything that you do. So initially, as you're learning the software, as you're learning these basic advantages, you can use this shape, and maybe you're going to ask, hey, Mark, is this one of those termination conditions that I keep hearing about? Or what is this right here? Or maybe what is this magenta line? And I want you to really get in the habit is if you see something and you're not sure what it is, just post a picture in the room, point it out with an arrow, use a shape. But the most important thing is this call out button because this is how you and I have a conversation. If you have a question about what's on the chart, just type your question with an arrow to the spot. And guys, I'll click on it and I'll answer your question. Or if you've taken a trade, and this is so key for us to move you forward with your education, tell me why. If you thought you were following rules, guys, write your rules on the chart. And this is for my new users because what happens is when you begin to write your rules on the chart, when you begin to take the time and you point out everything that you're doing, not only what you're doing, but why you're doing it, what you're doing is you're reaffirming that the rules are in fact being followed. You're taking a visual of what your rules mean, and you're writing the words associated with that look. So you're creating recognition through the repetition. And ultimately, what this does for you is the more repetitions you take of writing your rules on the chart, of making sure that you are verbalizing each and everything that you do in a trade, um, you're policing yourself. Very often, new users will ask me, "Hey, Mark, was this a long trade? Hey, Mark, was this a short trade?" And what I want you to progress to the point of being able to do is taking the checklist I'm going to give you in a little bit and writing those conditions on the chart. And then what happens is you'll be able to answer Dwight, Walker, Chef. This was, in fact, a long trade because all of my rules were met. And that's kind of the goal each and every time is that you begin to police yourself. So once you write on this chart, it's real easy, guys. Click copy down here. It's going to give you a little ding in your ear and it's going to copy it to your clipboard. If you're popped out into the educational room, if you're in that second screen, Control V is going to get that picture right into the room. And then I come through and I answer questions in order. The first hour is dedicated to the rules. And then after that, we're going to start going through your pictures and talking about what you're doing. You're going to get feedback on anything and everything that you've done, that you see. Um, and then also, if I click upload, this is pretty cool because this brings my picture and puts it in the cloud. So I'm on that app, screencast.com. There's letters and numbers. And once again, I can click copy and it'll put it right on my clipboard. And I can drop that screencast link into the room. You're going to see that as well in the room where people drop a link. But the great thing is once I have this link, guys, you have a spreadsheet that's going to talk about your rules, that's going to talk about what they look like, your management things, your chart reading things. You have a trade log. You're going to be able to paste that link right into your spreadsheet. And what this is going to do for you is this is going to let you come back and study it. So pictures and spreadsheet, guys, this is the foundation of the learning approach that we take. Um, and that's your step-by-step process to becoming a confident trader. If you have questions about Capture software, please feel free to ask in the room. Good morning, Debbie. Hope you had a wonderful long weekend. Um, Go through and practice. Here's your screen capture how-to. If you've never posted in the room, and I know who you are, take a picture of your charts and post them in the room, and let's make sure that you're comfortable with it because this really is our conversation piece. And your step to becoming a confident trader ASAP revolves around you posting your trades in class and then using that spreadsheet, tracking your real-time performance in that spreadsheet. Because what the spreadsheet does for you guys is this trade journal isn't just, it's not busy work for you. Every time I take a trade, I put it into this trade journal. I put it into this spreadsheet. And I'm talking about the trade that I took, when I took it, what type of trade was it? Hopefully it's that high probability trend trade that we're teaching. How did I feel? Where did I come from? What did my trigger lines look like? It's going to individually break down each and every rule for the trade to make sure that you are following it. But the most important thing, I think, is that it's going to be your ability to put some notes on that trade. I broke this rule and it didn't work out, or I followed the rules perfectly and what an easy winner and I felt confident. And every morning, so the one trade that I took yesterday, I looked at this morning and I said to myself, okay, what did I do? How did I do it? Did it work? Did it not work? Was it easy? Did I feel stressed? And what I'm going to find is that that calm, relaxed feeling is going to be associated with a rules-based trade because I know that the advantages are present. And those trades that made you feel a little nervous, you're probably breaking rules, right? You're giving away some advantages. So not only are you going to recognize the patterns in the market that are bringing you success, but more importantly, is you're going to recognize the patterns in yourself. Everybody has a thing, if you will. Everybody has a rule that they tend to break. I don't know why, it appears to be universal. Some people trade in determination conditions. Some people absolutely avoid momentum like the plague, and some people just love to jump in. Nothing is wrong with any of those approaches as long as it's repeatable and testable and it wins more than it loses, right? Because that's how it should get into our rule set. So you're going to recognize patterns in yourself that may be robbing you of success. But guys, the one thing that I tend to be pretty good at is I'm going to recognize patterns in you. So the more pictures that you post, the more I'm going to see these patterns. And I will point these patterns out. And sometimes it's going to sting a little bit. But I'm going to say, hey, I'm going to pick a random name that won't get their feelings hurt. Chris Novak, this is the fourth time you've shown me a picture trading into the termination condition. You notice that that's your fourth loser directly into termination conditions. So now as you progress with the software, what I really want you to pay attention to is that recipe for termination conditions. Let's go back, let's review it, let's make sure that you're comfortable with everything that seems to be taking that success from you. And together, let's move forward and overcome that obstacle. And that's what we're going to do when you post your trades and when you use that spreadsheet. Our first hour is dedicated to learning the trigger line and the Fibonacci rules for when it's okay to trade. And we are going to learn the rules to a high probability trend trade, to the highest probability trend trade, to a trade where every indicator on every chart agrees for the trade. This is a trade that typically wins 70 to 80% of the time. And guys, this is a trade that's going to create confidence through the memory of success. When you win more than you lose, it feels good. There's only three rules for a high probability trend trade. There are going to be three advantages that come from three rules. And the advantages create the recipe for a trade. A trade is momentum, it's a clear path, and it's an entry area. And you're going to recognize these three rules on two charts. And it really is that simple. And I want you to embrace the idea that simple is good, guys, that simple is better, that overthinking things rarely is advantageous for the new user. Your largest chart, if you're trading crude oil or the S&P, and guys, these are the easiest charts to learn on. If you're trading crude oil in the S&P, your large chart is a 13.2 chart. And the cool thing is it doesn't even matter what 13.2 means. It's a representation of the bar structure. Um, but your large chart, one bar, the most current bar on your large chart, is going to allow you to define direction, momentum, as well as areas. Um, and from this look, it's a broad stroke. This is like painting the side of a barn. It moves slow. It's slow to change. But your first two rules must be met on the large chart. You must have strong trigger lines, which are going to give you the advantage of momentum. That's rule number one. And then you're going to make sure that you're not trading in determination conditions, area that may reverse the market. And that's rule number two, and that's going to give you the advantage of a clear path. When these two advantages are present, we're going to shift our attention from the left to the right. We're going to look at that smaller, faster chart. And this is how you're going to refine that broad stroke of a brush. You're going to pinpoint the area where the market is most likely to continue. And this becomes your entry for that highest probability trend trade. And rule number three is going to clearly define exactly how to recognize where that point is. And we're going to discuss it in great detail this morning to make sure that you're comfortable. So large chart leads the way, always. Good morning, Tim. Large chart gets you in the right direction. Large chart keeps you from fighting the trend. Large chart gives you the advantage of momentum. Small chart is nothing more than a refinement chart, a way to whittle down the opinions of the large crowd. The people that move the market, the deep pockets, right? The guys that create the trend, create the momentum, the people that are reacting to these amazing Fibonacci areas, that's your large chart. The small chart is this little group of yahoos that feels compelled to fight the trend, that feels compelled to fight momentum. And while they have a little bit of strength behind them, they rarely are able to fight and push too far, guys. And we're going to take advantage of both sides of the spectrum. We're going to let the large chart lead the way. We're going to trade with the group. But we're going to let the small chart push us back right to that best of the best entry. So that two chart process becomes very important. And it allows you to reduce risk. It allows you to increase your profit potential. My hope for you is that you will simulate trades daily. Don't wait until you think you understand it perfectly. because you're on an educational journey and you're going to get smarter every day of your life. So get in there, simulate, take pictures of everything that you do. Guys, I will give you feedback every day in every way, and I will always revolve my feedback around the three advantages that we teach in the high probability trend trade. It doesn't have to be a high probability trend trade that you show me. Everybody trades differently and everybody sees things differently. But I will always go back and relate to those advantages to make sure that you understand what's happening on your charts. The idea is that you always practice the correct rules because the correct rules have been proven to win more than they lose. And we don't want you just jumping in hoping for simulated riches because simulated riches rarely translate into actual riches when you decide to go live, when you fool yourself into thinking you're a better trader than you are. We're going to simplify heavily, guys. I'm going to keep it as basic as I know how. Um, I encourage you to do the same. There's people that come through this room that can't be successful with one trade but are trying to catch 10 trades, and all you do is confuse yourself. So keep it simple. Simplify your plan. We're going to talk about the high probability trend trade. And this high probability trend trade, guys, this is my favorite part about the high probability trend trade, and I want to share this with you. A high probability trend trade is going to turn you into a chart reader. And I've already said it once, 90% of what you do during the day is going to be reading your charts. 10% is going to be actually taking a trade when the advantages are present. And you may find yourself sitting on your hands for an hour and a half. But the idea is that you could be paid consistently. You can win more than you lose if you learn to incorporate patience into your trading plan. Your chart reading coming from this high probability trend trade is going to have you fluently understanding where the market is likely to continue, and you'll be able to use that point for entry. And really, all trades that you take, you're going to understand where the market is likely to go, and this is going to allow you to get the most out of your trades, to understand through momentum, through Fibonacci, where the market is most likely to go to, and then finally, where the market is likely to stop. And these likely to stop areas are what we call termination conditions. And these are the areas that create a bounce. These are the areas where those deep pockets, those large chart crowds, this is where they, yeah, Ron, I just saw the yellow thing. I really think everybody starts Discord classes at the same time. If you guys lose me, make sure that you tell me. I saw the little blip. Hopefully it was just one blip this morning. Understanding where the market is likely to stop is going to keep you out of a world of trouble, guys. Understanding these termination conditions and how to identify them is going to put you in a position where you never trade headfirst into an area that's likely to create a bounce. So your chart reading is really going to be your goal for the first 20 days, focusing on the best of the best, focusing on getting in at the correct spots. Go back to my picture here. So we're going to simplify. We're going to look for that high probability trend trade. And then we're also going to look for medium probability trades, guys. And medium probability trades are defined, and I'll show you exactly. When one of these advantages goes away, a medium probability trade means that almost all of your indicators are going to line up for the trade. However, a small issue exists. Your small issue may be that your momentum isn't its strongest, as it is in the high probability trend trade. Or your problem may be that the path isn't as clear as it would be for a high probability trend trade. Or maybe your entry area falls just a little bit outside of the rules. The key to these medium probability trades, the key to success when you take trades outside of that high probability trend trade, is your ability to read the charts, to recognize the advantages, and then you'll make an educated decision on whether or not that trade is one that you're willing to put risk on. So we'll talk about two trades, and we're going to learn the looks so that they become easy. You're going to go through repetition, guys. You're going to fill your chart with pictures of entries all day long, and you're going to find these similarities, and you're going to recognize patterns through study. Recognition comes through repetition. And guys, I'm going to give you my spreadsheet right now because I've taken about 250, whoops, get over there, 250 plus client trades These were the perfect trades for the clients through their chart reading. Most of them revolve around the three advantages. You'll also use your spreadsheet to put your personal favorite looks on that second tab. This is where, when your rules are met, take a picture, burn that image in your mind. After class, before the next day, you can use Market Replay. You can go back and fix mistakes. Guys, if you're brand new and you just want to double, triple your repetitions, Market Replay allows you to do that. You can fix mistakes. You can work on management plans. If you're practicing a new trade, if it's time to add a third trade, Market Replay gives you the ability to go back and practice, right? It's exactly like the live market, but it's not. Take pictures from your Market Replay, ladies and gentlemen. Bring them to class if you need feedback. 15 hours every week. This room is open, and my sole purpose in life is to give you feedback on everything that you post. Little disclaimer, if you post it in the room, you're going to get feedback. And sometimes that feedback isn't going to be what you wanted to hear. I'm not your grandmother. I'm not going to put every picture on the fridge and tell you that you're perfect. We're going to get you consistent and focused towards becoming a confident trader. And sometimes that means that we have to fix mistakes. And you're going to repeat this process every day until you're taking the right trades, guys. What are the correct trades? The correct trades are the rules-based trade, because the rules have been proven to win more than they lose. And you're going to be able to guarantee that through your study. You're going to go back, you're going to test it, you're going to try to prove me wrong, I hope. Because if you do, you'll be with me forever, guys. And then once you guarantee yourself you can win, trade live money. And the best part is you don't even have to trade live money anymore. Once you win more than you lose, once your simulation is where you feel it needs to be, you can go to one of these proprietary firms, guys. You can go to Apex, or you can go to um, Elite Trader or Top Step Trading, and you can test your plan on their prop firm. For $35, you can control $50,000 worth of their money. It's simulated until you pass their test. But if you pass their test, they're going to fund you and they're going to let you keep 90% of your winnings, right? So the days of blowing through 10 grand in an education are gone. For $50, $100 a month, guys, you can test your theories. It's so much better than losing the 5 or 6 grand that I lost the first time I went live. So embrace the idea that that's a possibility. And then let's talk about that high probability trend trade, guys. Let's get into it. If I go over a concept that's unclear, if I go over a concept that you're like, man, I wish he'd repeat that, do me a favor, just raise your hand and say, Mark, I wish you'd repeat that. I will make the first hour 3 hours long if that's what it takes. Understand that this is an educational room, and the newer you are, the more it's for you. You veteran traders, please post your pictures, post your questions. Um, Make sure that you're writing your rules on the charts, because this is an educational room. But we're going to start right now, and we're going to talk about large chart looks, and we're going to talk about the trigger lines. And we are going to talk about having strong triggers, because when I have strong triggers, I have the advantage of momentum. Dun, 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 dun. So I'm going to minimize this. And I'm going to pull up the picture. The first advantage you can give yourself. So new users, I ask you to play along a lot. I hope that you do. What you'll find is that when you take the time to answer a question, you're reinforcing this great lesson in your arsenal. Um, and let's define trend first. This is the first thing that you need to be able to do to really be on the right side of things. If the background on your large chart is green, you're in an uptrend. It doesn't mean that you pull the trigger and go long in the moment, but it means that you're looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend, and you're only looking for rules to be met for high probability trend trade short. And guys, I'm telling you right now, never fighting the trend is one of the easiest ways to eliminate 50% of the losers that new users typically take. And I'm going to show you just how easy it is. Let's go to my live chart. This is the NASDAQ. Are we in an uptrend or a downtrend? What do you think? Atif, Chef, Tim, Adolfo, Dwight? Here's my most current bar. We're in an uptrend, right? How easy was that? This is going to eliminate 50% of the problems, guys. Trading with the trend is a great way to help keep yourself safe. Once you've established the trend, let's make sure that we have rule number one in place, strong trigger lines. In an uptrend, when that background is green, your small triggers, and let's define the pieces. These are your small triggers. These solid lines, it's two lines acting together to create a small trigger. This is a fast moving momentum indicator. These two dashed lines are your large triggers, and these two lines work together. They are a slower moving momentum indicator. When they work harmoniously and the small break above the large are wide, they're angled in the direction of the trend. It's the space created between small and large that let me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a word that you're going to hear in the room all day long. You're going to see it annotated on charts, OFM. Because when you have odds favorable momentum, when those trigger lines are their absolute strongest, that is the most favorable look for buying a pullback to Fibonacci support on that smaller, faster chart, on that refinement chart. On the large chart, it looks like a tail. It looks like a wick. But on the smaller chart, this tail is really 15 to 30 bars creating this one bar, and you're going to be able to pinpoint where the bottom of that tail is most likely to occur. In a downtrend, small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. This strong trigger look lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, guys. It will cover up mistakes that you make. Odds favorable momentum will push that bad trade in the direction long enough to manage it typically. Odds favorable momentum will break right through Fibonacci areas. So that advantage of momentum, whether it's an uptrend or a downtrend, should always be your primary focus, making sure that it's in place. Because when the small triggers return to the large triggers, when the small triggers work their way inside, we call this a weakening of the large triggers. When you weaken large triggers, anything can happen up or down. It's really a crapshoot, guys. It's a guess. It's flipping a coin. You're going to see these weak triggers quite a bit before a trend reversal. You're going to see those triggers weaken as they come into Fibonacci areas. So committing initially to that strongest trigger look is really going to create a huge advantage for you. And if I open up the chart again, and guys, NASDAQ is a great place for examples just because it moves so much. NASDAQ is not a great place to learn to read your charts because it moves so much. Whoa. Small triggers above the large triggers. The large triggers are wide, they're angled. Guys, this is your best of the best. Small triggers below the large triggers, they're wide. This is your best of the best. Sometimes you're going to get smalls up, large down, red triggers on green backgrounds. There's that indecision as the market tries to figure out what it's going to do. You see it right here as well. There's that indecision. This is your patience piece, new users. When you don't have odds favorable momentum, when those triggers aren't wide, when they're not strong, just sit on your hands and be patient for a second. Give yourself just a minute so that you can determine through your chart reading whether or not the advantages are present for you to take a trade. I'm going to load the areas back on it because we're going to talk about termination conditions next. But I want to remind you that 90% of what you do during the day is going to be waiting for this advantage, waiting for advantages to be present so that you can enter the market. This is a pretty good stretch on, I think it's crude oil. Odds favorable momentum works its way into anything can happen triggers, those weekend triggers. Notice that the market bounces up. And this is without the benefit of Fibonacci. This is really just using trigger lines and recognizing the correlation. From the bounce, from the reversal, there's that odds favorable, and there's one of those tails, one of those potential entries, and that odds favorable momentum carries the market up. They weaken again, and there's your reversal. This is consistent. These patterns repeat themselves all day long. Ultimately, you get odds favorable momentum. There's a tail. The market continues down. There's that indecision. This is where you're going to be tempted to predict whether the market's going to go up or down. This is going to be where you're going to be tempted to try to be first, right? To be the guy that says, hey, My indicators don't say it's going up, but I think it's going up. I'm going to take a long trade, and you're going to find yourself getting run over 2 or 3 times before you say, oh, I better go back to those lessons that Nexgen teaches. Because ultimately, the market sorts itself out. This fight ends, and you come back to odds favorable momentum. So I always love to ask my classes, is everybody comfortable with the first rule? Strong trigger lines. Most people recognize this in the first day. And you can do it right in the moment. Smalls are below the large are wide. Would you say that we had odds favorable momentum to the downside, ladies and gentlemen? What do you think? You have to react quick because the NASDAQ moves. So let's look at the S&P. The smalls are still inside the large. Do I have an odds favorable momentum look here? Or am I waiting for those trigger lines to break below to create space? Kind of a trick question. Exactly, Chef. We're just waiting. We're just going to see what happens. And then here's crude oil. Smalls are above the large. The large are wide. They're angled up. Do you recognize the odds favorable momentum once again? Guys, this is how easy it can be. This is how everything begins. With that odds favorable momentum, trading with the trend. And then once we have that in place, we have to make sure that we have a clear path. We have to make sure that there's nothing in our way that's going to create a bounce, that can create a reaction in the market. And this is what we call a termination condition. A termination condition is an area that may reverse the market very simply. And if I go back to the learning materials here and I go to tops and bottoms, termination conditions may reverse the market, and may is underlined. May is in different color font because areas break. Areas typically break with odds favorable momentum, but areas break all the time. Otherwise, we'd be caught in this range back and forth, just going back and forth like Pong. The areas that may reverse the market. Let me show you a picture. I like visual. Magenta divergence high lines, or cyan divergence low lines. We're going to put this lesson into play later, but divergence simply means that there was a loss of momentum in the move. If the market moves up and pivots down, and there's a loss of momentum that's calculated behind the scenes by your amazing software, this magenta line prints, and it lets me know that that loss of momentum was present. Same thing with the divergence low. If the market comes down and pivots up, this line may print if there was a loss of momentum, and these areas can stop the market cold in its tracks. Red Fibonacci resistance, blue Fibonacci support, and these yellow 1-to-1s. Guys, these are the areas that we're looking for, and we're going to gauge the reaction. And it's a simple two-part process, and we're going to go through it on one picture. In order to determine whether or not an area is a termination condition, whether it may create a reaction, whether it's an area that may completely reverse the market, the first thing that has to happen is price reaches the area. I would encourage you to write this down if you're a note taker. These dynamic Renko bars come down and reach Fibonacci support. It means that they get there, and these are areas, so if they're a tick off, they're at the area. Price reaches support. All you have to do is ask yourself, where are my trigger lines? If the trigger lines remain above support, well, support's an area that may reverse the market. Support is an area that may create an untradeable bounce. Support is that area that those deep pockets investors, the people that make things happen, may react to. So if price reaches support and the trigger lines remain above, no more short trades into the area. We are going to wait for the reaction. It's either going to reverse or it's going to break. Really, only two things that can happen. It either reverses or it breaks. An area is considered broken. This area of support that price reached, that triggers remained above, this area of support is considered broken when both the small and the large triggers break through the area. Support begins to act as resistance. Notice that the smalls and large break through and we have odds favorable momentum. There's one of those tails right off of Fibonacci resistance, and with all this momentum, this becomes your potential entry. And all this momentum carries us right to that point where the market is likely to go. That's your profit target. So in the beginning, I want you to keep it very simple. I want you to keep it very focused. And I want you to allow yourself to entertain the idea that it doesn't have to be difficult. If price reaches an area and the triggers remain above or below that area, this is a termination condition. The area is not broken and you do not have a clear path to your potential target. When both the small and the large triggers break above the area, in this case resistance, now I have a clear path. Now I have room to the target. And guys, I put the question on there. What if you insisted on a clear path? What if you insisted that there was nothing in your way? Most of you would tell me that it made your trading a little more profitable, that it reduced the amount of losers that you took. These termination conditions are going to happen all day, guys, and clearing a termination condition gets you to the next one. Here we have one of those divergence lows. This on its own is not a termination, guys. This is just a pivot with a loss of momentum. It's when price reaches that divergence low. Price reaches the area. The trigger lines remain above. Now I have a termination condition. This is what we call a pivot stop out. And a pivot stop out can be a very powerful termination condition. And if this pivot stop out reverses the market, makes my red large triggers go to green, my small triggers get above, a termination that reverses the market from a low is what we're going to call a strong bottom. And on that same token, a termination that reverses the market from a high, we're going to call a strong top. And a strong top and a strong bottom are the precursor for the absolute highest probability trend trade that you can take. When this termination creates the full reversal, gives me odds favorable momentum, that tails your potential entry for that trade that typically wins 70 to 80% of the time. I'm also a huge fan of this picture, and this is straight from the education material. This picture reminds me that 90% of what I do during the day is waiting for advantages. Everything is up. Notice that the triggers weaken as they come closer to Fibonacci. Price reaches Fibonacci resistance. No trigger lines have passed through. I know from rule number 2 that my path isn't clear, and I'm just going to sit on my hands and wait and see how it reacts. The reaction is that it pushes all the way to Fibonacci support. And once again, none of my trigger lines are capable of getting through the area. And since they can't, I'm not going short. I'm not going long into resistance that held, and I'm not going short into support that held. 90%, guys, this is that patience piece, waiting for everything to be right. This support takes us up, and you're going to see this a lot in the market, right? Because it's a fight between buyers and sellers. And we go back to that Fibonacci resistance area. At the Fibonacci resistance area, we also had one of those divergence highs and a second fib. Price reaches all of it and the triggers remain below. Now I have a pivot stop out, and it's even more powerful because it coincides with Fibonacci. And this is where this termination creates a reversal. Gives me odds favorable momentum. Those wide triggers on both, there's that potential entry. The patience that you exhibit here sets you up for the money you make here. So 90% of what you do during the day is just going to be sitting on your hands, waiting for those advantages. And what you're going to find is that patience is often rewarded. Here, price is moving down. Price just means those price bars. The momentum is advantageous. Small and large got below support. It's acting as resistance. But it reaches Fibonacci support. And when it reaches Fibonacci support, none of the trigger lines break through. This is that 1-to-1, the yellow 1-to-1. This is a 100% fib alternate. No trigger lines break through, and because they haven't, no short trade. Look at the reaction to the market. So we knew not to go short. It keeps us safe. Ultimately, the market reverses. Large go from red to green. The smalls get above. And it just has to do a little bit of work. Smalls and large get above resistance. Resistance behaves as support. Smalls break outside of the large, And there's that circle right on the tail. There's that highest probability trend trade that you can take. This is that 70 to 80% winner taking you all the way with the momentum to Fibonacci resistance. This is where the money happens, guys. This is where money gets lost. Is everybody comfortable with the idea on termination conditions? Price reaches, one-to-ones, triggers are below. I'm just going to sit on my hands for a moment. Here we see support has held, no triggers through, and it rifles the market up. No triggers through support, no short trades, it rifles the market up. There's one of those pivot stop outs, and that's what begins the push. Pivot stop out begins the push. Guys, you're going to see these termination conditions all day long, and all you have to do is the comparison. Price reaches, where are my triggers? Price reaches these one-to-ones. No trigger lines have broken through yet. We're going to sit on our hands for just a moment, and we're going to wait for that path to be clear. If both small and large get to the other side of these one-to-ones, then the path is clear. Then we're going to look for our rules to be met for that high probability trend trade. This is on crude oil. Is everybody comfortable? Give me a Y in the room. Guys, this is the third piece of the puzzle. You've already identified trend. You're very capable of identifying momentum in the moment. So this is the part that may take a couple days. It may take a few days of you scrolling back and studying and look at the reaction to these areas. And then there's one more termination condition that I'd like to talk about with you guys. Remember, this is a large chart. This is a slow chart. This is a broad stroke of a brush. It's difficult to see change happening in the moment on such a large chart. So there's one more termination condition that I'm going to introduce. And this is the only termination condition that I look for on a smaller, faster chart. Three divergences in the same price range may terminate the trend. So that's three losses of momentum in the same price range. It may terminate the trend. It becomes even more powerful when your small triggers work their way inside of those large triggers. Remember that weakened triggers, those anything can happen triggers. So now visually, you see three divergences, three losses of momentum. Visually, you recognize anything can happen triggers. This adds power to that termination condition. It becomes more powerful still when that third pivot from a low is higher than the previous, creating a head and shoulders pattern, or that third pivot from a high is lower than the previous, creating that head and shoulders pattern. And guys, I'm not going to lie to you. I don't trade head and shoulders patterns, but what I do recognize is that when a third divergence has that higher lower pivot, I'm not trying to go short anymore, or I'm not trying to go long anymore. And you'll see this look from the bottom, or this look from a top, when that market appears to be turning from nowhere, when it hasn't reached that key Fibonacci area yet. So guys, that's the only termination condition that I'm looking for on a small chart. And what you'll find very often, and let's see if we can find an example of it on crude oil. Three divergences in the same price range gives us a push beyond our areas. There's those three divergences right from a low at 95. And where did that happen? Let's see. If I scroll back to this area, there's that clear path. There's that downtrend. There's everything that makes it look like the market's going to go down, and multiple divergences in the same location helped you recognize this turn before it ever happened. So guys, not only is this going to be a great way to keep you out of trouble, it's also going to become a very effective way for you to manage your trades. Atif, if you're in a short position, and these three divergences print, this is your giant red flag saying get out of that short position. Things are changing. Or, Chef, if you're in a long position and these three divergences print, it's going to allow you to manage out, right? To conserve your equity, to not just sit and hope. Visually, you're going to see that that market may be changing. So this is rule number 2. And rule number 2, remember, provides you the advantage of a clear path. So at this point, we're 2/3 of the way to having a trade. We're 2/3 of the way, guys. Large chart had strong triggers. The momentum is present. Large chart hadn't reached an area. Therefore, Our path is clear. We have room to get to that target. So now we're gonna whittle it down, guys. We're gonna refine it, and we're gonna look at how to pinpoint where the market is likely to continue. And I'm going to show you how that refinement process looks. One bar on the large chart that provides you odds favorable momentum. One bar on the large chart that gives you that clear path. This one bar with the tail is 15 to 30 bars on your smaller, faster chart. Here's that refinement process, and you're going to be able to pinpoint exactly where the market is likely to continue. And notice that it happened right at the tip of that tail. So let's go through the recipe. How do we define our entry point? Well, you're going to be so good at this that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. That's rule number 3. It's the wordiest of the 3 rules. You're going to use a limit order, meaning that you are literally going to wait for the market to come back to you. When everything says up, you're going to let that small group push you right back to an area inside of favorable large triggers. And next-gen users, your entry is going to be waiting for that market to come to you. You're going to buy the market on the way down, or you're going to sell that market while it's on the way up. Not 3 pivots, Tim. 3 divergences. Big difference. Because a pivot is just a pivot. It's just an up and down, and that happens in the market all day long. But visually, when you can see 3 divergences in the same price range, you're not watching for consolidation. You're just saying this may terminate the trend. That's all it is. And I believe language is very important, guys. 3 divergence in the same price range may terminate the trend. It's not necessarily going to create consolidation, right? Because if we go back here and we look at those 3 divergences right around 4:50 a.m., absolutely no consolidation at all, Tim, right? This literally reversed the market and cranked it to the upside. So all this is a visual. If I was in a short position, let's say hypothetically, I'm in the market right here, and everything is going down, and I'm saying to myself, I'm going to that blue fib. This is my target. These 3 divergences get me jumping ship saying, well, I may not make it to that blue fib. Pretty cool, right? So it just shows that change just a little bit faster. Great question. Thank you for that. So we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Guys, here's your definition of favorable large triggers. Favorable large triggers means that on your smaller, faster chart, on your refinement chart, the large triggers, those smooth, dashed, and your synthetic triggers, those stepped, dashed, are working together, one on top of the other, wide in the direction of the trend. So in an uptrend, they're going to be up like a shark about to breach, one on top of the other. And in a downtrend, they're going to be, I don't know, like a submarine diving if it were vertical, one on top of the other. But what this look does, this overlapping of the triggers does for you, is it creates your smallest window of opportunity, the smallest area where the market is likely to continue. There will be times in your trading when you ignore favorable large triggers, but as a brand new user, it creates a huge advantage in creating your bounce point where the market is likely to continue. So when the rules are met, this is the look on your small chart. You should have strong trigger lines. Small should be above. So Snorri, everything that we do are patterns that are testable and repeatable. That's a great question. 2 divergences, and the reality is no divergences can reverse the market, right? Like that market can just turn. We're not in control. But what we have found over decades of study is that when 3 happen in the same price range, it is most likely to reverse the market. And then the flip side of that, and let me see if I can find an example, is sometimes you have odds favorable momentum, and I'm looking to see where there's only 2. See if I have a point where there were only 2 divergences. You may get three divergences to just give you pushback to your entry, or you may get three divergences for the full reversal. But sometimes I'm looking for an example. You get two divergences, and this is right here at 1332. Two divergences print, and let me see how it corresponds with this market at that point. And this is a great example. In a downtrend with odds favorable momentum, those two divergences might push you up a little higher, but two divergences have trouble fighting odds favorable momentum. Two divergences have trouble fighting that clear path, and sometimes it just creates a little stutter, right? And ultimately that market continues down in the direction of the trend. It doesn't mean that it can't, right? So sometimes, and now we're getting a little advanced, is Snorri, if I have weak triggers on my large chart, two divergences might reverse it, right? Because now I've lost momentum on a large chart and a small chart. But when everything is cranking and it looks like that market's going to go, three divergences are kind of my line in the sand for taking the exit or for managing out. Does that make sense? Great question. And that's the pattern that repeats itself more often than not. That's the pattern that can cancel out those favorable large triggers. And that's why we teach it in the beginning, because it becomes a great management tool. So when the rules are met on the large chart, this is the look on your small chart. Everything is up, everything is strong. Synthetics and large, one on top of the other. Guys, this is where you've made the decision that it's time to look for an entry, that it's time to get into the market at the absolute best of the best spot. Rule number 3 says we're going to use a limit order to buy or sell a pullback. And remember, a pullback is that small little retracement in price that's counter to the underlying trend. Your pullback begins with a reversal bar on a smaller, faster chart. When everything says up, every indicator is up, every indicator is strong, the path is clear, green bars aplenty. Next-gen users, you're going to wait for this down bar. You're going to wait for something that says that small crowd is going to try to fight. And when they do, when the fight begins, when the retracement begins, you're going to identify your areas inside of favorable large triggers. High probability trend trades come from lines. They come from fibs, they come from mid bands, or they come from yellow one-to-ones. Because these areas act as a brick wall. It's like throwing a tennis ball up against it. These areas provide the market a place to bounce. And when they're inside of those favorable large triggers, it's the most likely scenario. So you're going to activate a limit order right at the top of the window, right at that highest point of support for a long, or at the lowest point of resistance for a low. And we do this because remember that your large chart is screaming up. Your large chart has nothing to create a bounce. So we don't anticipate the push all the way to the bottom. We're going to make sure that we get in at the top so that move doesn't miss us. And you're going to activate your limit right above that at the top of the window. And then you are 100% powerless on what happens next. Either the market is going to push to your limit order right at the top of the window of opportunity. And here's a great way to identify it, guys. Take your drawing tools. When the reversal bar prints, look at the highest point of your triggers to the lowest point of your triggers and create a general area where you're looking for your window. Then take a different color or a circle, and for a long trade, go from your highest point of support to your lowest point of support. And that white box represents the point where the market is most likely to continue. That white box represents the point where it's most likely going to bounce. So from this reversal bar, price comes down and it reaches the top of that window. You're in a long position with those three advantages. I want you to be okay with the idea that it may go to the bottom of that window because it is an area, guys. It's not an exact science. It's not to the tick. If it were, it would be, I don't know, amazing, I suppose. And then there's one more scenario that you have to factor in. that it may go beyond your window of opportunity, that you may lose the advantage of that area where the market is most likely to continue. And this, for most traders, is the hardest realization to accept in the very beginning. 70 to 80% winners means that you take 20 to 30% losers, right? And that's just math. Guys, it's a cost of doing business. Losers are not negative, especially when the rules are met and all the advantages are in place. And this is why I encourage new users to focus on their advantages, right? Because this is a trade that 70% of the time is going to do well. 20 to 30% of the time, it's going to go right beyond that area where the market was most likely to bounce, where it's most likely to continue. Next gen users, you're going to have a stop waiting outside of that window, 4 or 5 ticks beyond that window, and you're going to say to yourself, I don't want to be in this trade anymore because it's no longer giving me the advantage. It's no longer giving me that third advantage, and that's okay. It's going to happen from time to time. But what you're doing in the beginning is your focus is this entry. Your focus is getting in at the best of the best spot, because when you're in at the best of the best spot, it creates a manageable trade. You know exactly where the risk needs to go, right? And this is a trade that 70 to 80% of the time, with all of those advantages in place, this is your typical outcome. The market's going to enter at the top of your window. It may push a little bit further. And then if it gives you a reversal bar, you're going to reduce your risk even further, a couple ticks below that reversal bar. And with all of the momentum and the clear path on the large chart, very often it's going to be profit target reached. Your whole goal for your first couple weeks with Nexgen is to be able to enter the market at that circle, to have the confidence to buy the market when it's on its way down, to learn to trust the methodology to sell that market when it's on the way up. Because when you put this together and you learn the rules for the high probability trend trade, guys, you're going to understand the direction of the market. You're going to understand how to identify momentum. You're going to understand whether or not the market has reached an area likely to stop it. And you're going to understand where the market is likely to continue. And you're going to piece these together to create the highest probability trend trade, to give you confidence through the memory of success. And remember, those tails on the large chart, we don't trade the tails, right? Because it's slow. It's like this bulky freight train moving. We can refine and identify where the market is likely to continue. And if you scroll back historically and circle these tails, begin to take pictures, learn the methodology, you'll notice that very often they line up with areas inside of favorable large triggers. And that's going to be a great study tool for my new users, is you can go back on the market, right? And with all that momentum, where does this tail happen? At support inside of favorable large triggers, right? If I scroll back, where does this tail happen? This tail happens at resistance, but it's a little bit below those large triggers. Maybe that wasn't your trade. But if you scroll back and scroll back, there's that one that we circled earlier. You begin to recognize this pattern that the market loves to come back to areas inside of favorable large triggers. And this trust process is great to keep you from jumping in too soon, right? This trust process is great to keep you from jumping in too late. And guys, you can scroll back over and over, and you'll recognize these tails everywhere. And your job is just to be able to find that entry initially. That was 1101. That's quite a bit of scrolling, but let's go back to it. One more. Guys, give me a Y in the room if you're with me, if you're comfortable, and really if you're accepting that it's going to take a minute, right? And that's a pretty ugly one. Guys, it's going to take you a little bit of time to get comfortable, but you're going to be able to read your charts. Look at this. There's a loss of momentum, but it's not from an area. It's just a pivot with a loss of momentum. My small triggers are down, but my large triggers are still green. I can't have odds favorable momentum. And price reach support and my trigger lines are all above. I have a termination condition. Guys, that quick chart read, and you will be able to do it in a matter of seconds just like that, tells me sit on your hands, Mark. The advantages aren't present. Please don't trade into this area of blue support because it's likely to create a bounce, especially with these trigger lines all the way up here. Guys, this gap theory, when price hits an area and your large triggers remain above that reversal bar marker, it's not uncommon to watch price snap back and close that gap to the large triggers, which means any short trades taken in this area typically get run over. Rule number 2 keeps you safe. Rule number 2 keeps you focused. The advantage of momentum gives you a clear advantage in a market that's cranking in the direction of the trade. And all you need to do, ladies and gentlemen, is focus on these patterns for 30 days. Focus on the best of the best. Focus on your entries. And your entry can be defined with this checklist. Is the market coming from a good top or bottom? That means is the market coming from a termination condition that creates a full reversal? I've included a video of John Novak going through the most incredible lesson on understanding tops and bottoms and areas likely to break and likely to hold. I'd recommend that you watch it. Do I have odds favorable triggers? Are there no termination conditions present? And is there an area inside of favorable large triggers? Guys, this is a high probability entry. Here's the exact same checklist, but this one has pictures liberated from the resource materials. There's your termination that creates a full reversal. Here's your odds favorable momentum, and then just a little more, there's where that momentum goes away. That's where your advantage is lost. Here's your recipe for termination conditions. And here's identifying that window of opportunity from the point of reversal bar to identifying the area, telling you where that limit order goes, where your best of the best entry comes from. My hope for you guys is to keep it simple initially, to be able to go through, oh, look at that. It bounced, and it's going right to that circle that you guys created with that gap theory. Patterns repeat themselves every day. Patterns repeat themselves over and over. A lot of times, when this isn't a termination condition, and it comes all the way back to that mid-band, and those large triggers don't break, sometimes they're looking to finish the move to that next key Fibonacci area. Because remember that these guys that make the market move know exactly where these key areas are. And now, Nexgen users, you know exactly where they are as well. Talk about advantages. So keep it simple. 30 days. I say keep it simple for 1,000 days. Less is more. The less I have to think about it, the smarter I become. I'm going to give you a plan as a brand new user that you can follow for your first 30 days, 60 days, 90 days. Yep. Is that the one? So Ron is saying, I understand that when price reaches Fibonacci support and those large triggers don't follow, it creates an opportunity. Guys, this is not a high probability trend trade. Not at all. It fights the trend, it fights the triggers, it fights everything. Or does it? This is a chart read. This is Ron taking his ability to read patterns through repetition, understanding the most likely expectation, and creating an opportunity to close that gap, the same way that we talked about. That's a little further down the road when you're capable of reading your charts. Guys, this plan right here is designed as a stepping stone in your learning journey. It's going to help you optimize your chances of success with the high probability trend trade or one of those medium probability trades. I've included one into this to keep you busy because idle brains take a million trades that don't fit the rules. Through simulation, study, class feedback, and continuous practice, you're going to craft a plan tailored to your own personal goals, guys. And it's going to be based on your experience reading the indicators. The more questions you ask about indicator reading, the quicker you're going to be able to tailor a plan that suits your needs. The more pictures that you post in the room, the quicker you're going to be able to tailor and formulate a trading plan that gets you where you want to be based on what you see in the market. This is designed as a simple plan for consistency to keep you on the right side of things as you go on your educational journey. And notice that it starts with never fight the large chart direction, never fight the large chart triggers. Ron just broke both of those rules in this trade, right? But he did it because he's at a different place in his journey with his chart reading. So Ron's trade doesn't have to be your trade, not yet. Define your entries. Guys, take 2 weeks defining your entries, getting in at the best spot, because great entries create manageable trades. I say that every day. I'm probably going to put it on a t-shirt someday. Great entries create manageable trades. Getting in at the right spot reduces risk. It maximizes profit potential. Make sure that the conditions are met, and guys, start taking pictures of those rules being met. Start burning it into your brain so that it becomes easy. Every entry needs to be managed. In the beginning, guys, you're learning to read your charts. You're not going to be able to manage in the moment. So, a very pragmatic and methodical, mechanical approach to management tends to serve you well. The same way you're allowing a checklist to get you in, you'll have the exact same checklist to work through a trade. And I'm going to show you what that looks like, guys. Everything begins, with the best entry. Everything begins with that area inside of favorable large triggers, that highest chance of success where the market is likely to continue. Once you nail these entries, you're going to be amazed at how easy your life gets. At this point, with this entry, there's nothing for you to do. You're either going to get your stop hit outside of the window, right? And that's a normal cost of doing business. I say this every day because I like the way it flows off the tongue. Losses are a normal part of a positive equity curve. It's important that you understand that. Losses are going to happen. Don't worry so much in the beginning about whether or not it wins or loses. Worry about whether or not your entry was rules-based, because that rules-based entry provides a statistical advantage. So you're either going to get stopped out, and that's okay, or you're going to get that reversal bar in the direction of the trend. And your management plan for the new user is nothing but if-then scenarios. If I get a reversal bar in the direction of the trade, then I'll move my stop 2 ticks above it in this particular short trade. Now I've managed my risk. I've managed my risk before I ever begin to look for rewards. It's either going to stop me out, and then once again, that's okay. I can't stress that enough. Or it's going to reach my first target. And on this simple plan, guys, your first target is $100. That's too big. There are traders that make a career off of $100 trades. Everybody wants the home run, right? At $100, when your first target is hit, that $100 goes into your account. They won't take that away from you. That $100 creates confidence through the memory of success. That $100 gives you this euphoric feeling. I'm a winner. I did it. I took the perfect entry, and now I just got paid. I love this stuff. And at the point where you hit that $100, you're going to move your stop to break even. You're going to have zero risk on the trade. So now not only is that dopamine full tilt boogie because of the winner, you've got nothing to lose. This becomes an important part for the new users because mentally having nothing to lose will make it easier for you to hold for that second target without moving your stops all around. Right now, I'm either going to get stopped out break even, which is cool, whatever. That's no skin off my nose. Or it's going to hit my second contract. If it hits my second contract, that's a $300 winner. That's a $300 winner from the basic accumulation of momentum, a clear path, and an entry area, the highest probability trend trade that you can take. It's a $300 winner that is stress-free. It's $300 winner that is mechanical and methodical. It's $300 from 3 advantages on only 2 charts. Minimal thinking, right? Minimal stress, minimal anxiety. And once you get great at this, that $300 is the basis for a plan, guys. And $300 on a 2 lot can be $600 on a 4 lot, right? And $600 a day is only $300 per contract. That's not a whole lot, but that's a $3,000 week. And guys, that's a $12,000 month. And that's a $144,000 year. And the idea, and what you'll find, the most successful traders in the world aren't taking 10 different trades. They're taking the best of the best trades that consistently provide a statistical advantage. And they're taking them with multiple contracts. And Nexgen has a lot of users trading 100 lots, right? And if I make $100 on a 100 lot, that's a $10,000 trade with the same advantages, with the same clear path, with the same momentum, with the same entry. And that's a hell of a way to make a living, guys. But you've got to focus on the process first. You've got to be able to recognize the advantages first. And then once you do that, you're going to build your own plan. And this final thing that I'm going to give you, this is a template to build a plan. This is a template for you to start looking for that next trade. One thing that I find in this room a lot is that a lot of people want to break out of the S&P. They want to break out of crude oil, and they want to go to the NASDAQ. The NASDAQ's a different animal, guys. It doesn't trade like the S&P and crude oil. You need to create a plan for the NASDAQ, and it all begins with defining your entry. A lot of you want to take momentum style trades because you see Ron doing it, right? Ron, you're a troublemaker. Not really. It's a great chart reading. Your chart reading is going to get to that point where you're like, man, I can nail these trades. Define your entry, right? Check it out. You're going to define your entry. You're going to create the rules. Take pictures of your perfect entries, long and short. Good morning, PFI. And the most important thing that you can do is don't do it alone, guys. Nexgen's here to help. Post those pictures in the class. Post those pictures in the class, and let's talk about the good and the ugly, right? The good and the bad, the advantages and the disadvantages. And I will promise help you in the creation of your plan by helping you identify the advantages, to help you understanding the challenges that may be in place. I will give you feedback on everything that you post in this room. If you don't want feedback from me, if you're posting just to show off, if you're posting just because it makes you feel good, then hit your mute button because you're going to get feedback on every picture. And what we find is that when I do that, you get better. Terminations for the win. Isn't it amazing? You guys knew not to go short because of rule number 2. There's a pivot stop out with no triggers through it. Terminations for the win. You knew not to go short because the rules weren't met. And look how that market cranked up. And look at that. There's 5 divergences in the same location. Weak triggers. And there's those 2 divergences, Snorri. 2 in the moment, and it's pushing it higher. And it pushed it right into resistance with every trigger line below it. So we're not going long, even though the small chart's green, because the large chart says that 79.50 might create a bounce. Do you see how quickly your chart reads can come to play, guys? It's pretty awesome. And they're still fighting. And now your small triggers are above everything, but you're in a downtrend, and you're just kind of in a holding pattern. So guys, that's my first hour, and it's the first hour every day. It's the first hour. It's the same every day. It's talking about advantages. My sincerest hope for you is that you'll focus on advantages first. You'll focus on the best of the best. Keep it simple. Guys, if you are winning more than you're losing with simplicity and you want to add another chart, we can talk about it all day long. I'll help you with your market flow charts. I'll help you with your momentum style trade. I'll help you with your high volume area trades. I'll help you with any trade you can show me rules for. What I won't do is write your plan for you. What I won't do is tell you when to enter the market because I don't call trades. And what I won't do is a million conversations outside of the room if you're not willing to have a conversation in the room, right? So participate, post those pictures. If you have a question, now's a great time to post it. If you have a picture, now's a great time to post it. I'm going to take 5 minutes. And when I come back, I'm going to start going through the trades that you guys have shown me. Do you guys want to watch the fight between buyers and sellers on crude oil? Throw your predictions in there. Who's going to win? Buyers or sellers? The trend is down, but the smalls are up, but the large are down. The hardest thing for a brand new user to do is simply admit, I don't know. I don't have any idea who's going to win, guys. And I can tell you right now that my opinion means jack squat to these guys. They don't care what I want, what I wish, what I hope. I'm going to wait for them to create an advantage, and once they do, I'm going to hop on it. Guys, I'll be back in 5. If you have questions, post them. If you have comments, post them. And when I come back, we'll start clicking through the pictures that you guys have posted. Back in a few. I am back. Dwight for the win. You said you're going to go with the trend. What an awesome example of how just knowing which direction the market's going creates an advantage, right? Not looking for those long trades, not saying, well, the triggers are above support, it should go up. You're saying the smalls are below the large, the trend is down, and sure enough, that large trend or that trend wins. Great job. Nice stuff. And guys, that was just chart reading. That's all it was. So can everybody hear me? Are we good? I'm going to scroll up to the top of class. And when I do it, whoops, it looks a lot like this. I've got to get all the way up there in order to see what you guys are posting. So once I get up there, guys, I'm going to click on your pictures, and then we're going to have a conversation. And Mike M got us started today. Excuse me. Starting on the large chart, Mike M says, hey, check it out. I have strong triggers. You can't tell on his chart because it's gray. But the smalls are below the large. He's in a downtrend. He's coming from Fibonacci areas. Everything is strong and everything is down. So Mike M allowing the large chart to lead the way, saying, hey, look, this is all the momentum coming down. And he calls it a 50-50 trade. And guys, what a 50-50 trade means for you newer users, I told you that you will eventually take medium probability trades, right? So when you talk about medium probability trades, a 50-50 trade simply means that your small triggers have made it through an area with odds favorable momentum, strong trigger lines, and the small triggers have made it through the area of support. What this means is that with all of that momentum, this area has the potential to break. This area has the potential to break, but it hasn't broken yet. So new users, give me a why. It's important that you understand that. It has the potential to break because the small triggers are through and the large triggers are not. 50% of my triggers are through, 50% of my triggers are not. All of this momentum says that 4,339 might get smashed, but it's not a clear path because the area hasn't broken yet. And that's the part that I want you to remember, that it's not a clear path, which means that one of the advantages is gone for that high probability trend trade, which means that we're now in a medium probability scenario. In this medium probability scenario, it's really important that I don't give up momentum. And I don't give up an entry area. I want to make sure that I have the best of the best. So when I have that 50-50 look, and I put in this picture, my money is worth the perfect entry. And guys, that's the second trade on that keep it simple plan. My money's worth the perfect entry. My money is worth no divergence on the small chart, making sure that I have strong triggers on the small chart, and making sure that that area where the market is likely to continue is small and concise, so I don't put a lot of risk on the trade where I'm hoping that the area breaks. And Mike executed flawlessly. His large are above 43, his smalls are through, the momentum is strong, no divergence, strong triggers, and he pulls right back to that stacked area, right at that 43 area. And it makes it easy for him to get in and get paid. Beautiful execution on a medium probability trade. Mike M, the only thing that I might say about it, and I'm not even sure that he's still in here. He's probably off trading. The only thing that I would say about it is that with this much momentum, right, more often than not, it makes it to that fib. With this much momentum screaming behind it, it creates an opportunity just for you to look for that next area. Maybe hold the second contract. Take profits at the first trouble spot. Don't lose any money, but it gives you an opportunity to get just a little bit more out of that trade. In the beginning, and this isn't necessarily for you, Mike, the management's very mechanical. It's very methodical. The idea is to get paid, guys. That's why we're doing it, to make money. But what you'll find, and you can begin to annotate your charts and put them in the management section, is that when your large chart is strong and your large chart has a clear path, you're going to be able to take that opportunity and hold for those bigger moves. I don't have numbers for all of them, PFI, so I really can't. I can't talk about it in an educated manner. But what I can say is that when it comes from a strong top or bottom, that high probability trend trade typically wins 70 to 80% of the time. And here's the part that you guys, most people don't realize, and it took me a while to realize this, is there are people in positive equity. There are people making money every day on 30% winners. I always ask myself, where's the market coming from? As you create a management plan that reduces your risk, these great entries allow you to reduce risk. What you'll find is that you are going to lose trades. But if you're winning bigger than you lose, and that's where the management side comes in as you grow with the software, that's where understanding that strong triggers keep the market moving. That's where you can start making those money. But PFI, it's the trades that come from a termination condition. It's those trades that are coming from that full reversal. And why is that? That's because, and let me show you this picture to give you an idea. The sellers were in control 100%. The sellers were pushing this market down. They had the bull by the horns, and they are pushing. And they reach this key area, this area where all of the buyers are waiting, right? All of the buyers are right here, and they're saying, triple dog dare you sellers, come down to this area, and we're going to unload. And I want you to see what happens. And I think this is the part that we don't really think about as traders. The sellers are in control, and they reach this key area where the buyers were waiting. They were standing there, arms folded, mad as hell, ready to fight. And they push. But guys, the market is fear and greed, right? And the seller said, but we're not done. And they push back. And the buyer said, we already told you we're going up. And they push up. And then there's a push back. And then the buyers establish dominance, odds favorable momentum, and a clear path. Guys, this right here is that last ditch effort by the sellers. There's a couple guys that didn't get the memo that they lost. And the reason that is the highest probability trend trade PFI is because it's this huge, strong reaction from such a key area, from that area that they've been waiting maybe hours for the sellers to push to. And then all of those advantages fall into place, and this becomes the best of the best. This right here is still a great trade, but without it coming from the best of the best area, this is a trade that may be a little short-lived. Does that make sense? A little bit of the psychology, right? It's just a fight, guys. That's all it is. It's just a fight between buyers and sellers. And man, when they get to those key areas, let's see if we can find a great example of it, where it was running pretty hard and then stopped. This market runs all the way down, strong breaks. They hit the first key area. There's your big bounce and indecision. But the sellers aren't done. So they push down, strong triggers break. Buyers fight again, testing the waters, but the sellers aren't done and they push down. And then they reach this area. And the buyers unload, and they're able to get them all the way up here. And the sellers say, you know what? This is the area that we wanted. And then when the sellers are satisfied, that's when the market reverses, right? So we can identify the fight. We can identify and see what's going on. So what's the difference? If the smalls make it through, the area, it might be a little bit of overrun PFI. And that's why we call it a 50-50. And that's why we say if the smalls overrun the area, it's not necessarily broken, right? remember that if it's coming into this area with all of that momentum, it's difficult to stop the market. It's like a semi hauling butt down the highway. If you throw a kitten out in front of it, it's probably not going to be able to hit its brakes in time. That's a horrible analogy, and I shouldn't have said that. But with all of this momentum, areas have the potential to break, and sometimes it just takes a second to slow it down, and then the buyers are able to take over. And this is why on these 50-50 looks, when the smalls break through, it's so important to make sure that everything else is perfect because the area is not broken. And you'll see those a lot. You'll see those 50-50 trades where the smalls eke through just a little bit, but the large never come close, right? But it's those ones where they terminate beautifully, no triggers through. Those are the ones that can move the market the other direction with a little more vigor. And here's one of those examples again happening. Not a good top because price didn't reach an area. Not a good top because price didn't reach that pink line, that magenta line. So PFI, now you're looking at the small triggers have broken through support, but the large triggers remain above. Do you see it? This area has the potential to break, but it's not broken. And then there's that divergence. So there's a loss of momentum coming into an area that hasn't broken. And guys, I put this circle up there. We'll just extend it. Dwight called it. He said everything said down, so at least he wanted to go with the trend. But I'm at a 50-50. I have divergence. I've got to let this market figure out what it's going to do. And that's kind of what these rules are designed to do, is to help keep you safe in those moments of indecision. When the market's not sure whether it wants to go up or down, it's easy for us to form opinions about whether or not we want the market to go up or down. All right, Gary. Whoops. All right, Gary. Termination, determination. I love this picture. Let me make it huge on the chart. All right, show of hands. Who's ever been chewed up in a market that is range bound? Let me find my hands up here. I'm going to raise my hand. I've been caught up. There we go. There's my hand right there. In a market that's consolidating. I've been caught up in a market that can't decide what it wants to do. Guys, rule number 2. When that market goes from support to resistance to support to resistance, this is visually allowing you to say, you know what? I'm going to let it break before I make a decision. And you can see that it's caught in between those fibs. It's a wonderful way to keep yourself safe. I'm not saying that you'll never get caught in consolidation, but it helps you have smarter targets too. From support to resistance, back to support. Once again, we're just letting the market sort itself out. And look at what his smaller, faster chart looks like when that large chart's trying to figure out what the heck it wants to do. Gary, great pictures this morning. Just one more advantage that Fibonacci gives you guys. Just one more advantage that this software provides. And then we get that 50-50 look, right? Smalls are below the large. The large are trying to get wide, but they haven't broken through the area yet. You do get one divergence. So that loss of momentum coupled without a clear path, and that one just didn't work out so much. And if you're following that simple plan, that KISS plan, it keeps you out of that trade. All right, Jose Trades, let's see what you did. Whoops. All right, Jose, smalls are on the tail end. I like it. I think it's a great look, right? You're coming from support. Everything says up.
losing momentum a little bit, and this kind of couples into you're losing that momentum a little bit, small triggers, divergence. It's a great look, and it's a beautiful entry. It pushes a little low, and then your stop could have been right around 86, below that reversal bar. And then I see two divergences here. And there's that third divergence, and your triggers are trying to break. And then your 8 range said perfect divergence with a reversal bar from resistance. And it's a pivot stop out 50-50 on your large chart. Jose, I think it was a great shot at a trade to get those next areas. And they're just consolidating a little bit. That fight, those buyers and sellers are going to duke it out there. And if I'm not mistaken, that's exactly what we were looking at here, right? Those buyers and sellers duking it out. I love the look. I think that it was a great trade. I think it's one of those costs of doing business. Your advantages were in place. All right, let's see what we have here in Saya. Termination, odds favorable, everything down. You say it was a good entry. All right. So you're looking for that momentum style entry. Yes, Insaya? And guys, once again, I'll talk through everything. I love to see your rules, though. I really do. I love to see your rules because your rules help me help you. Bad entry into fibs. You went long here at 8:30 when everything said down, it looks like. So, Insaya, am I correct? You just hoped that this area would hold with the triggers down? I see why. Just didn't work. And then now you're jumping in. So there's your momentum style. Let's talk about this one. And do you see how hope is a horrible trading plan? It is for me anyway. When I hope an area holds, that almost guarantees that it's going to break. It's like they have cameras on me. So Insaya, let's talk about your momentum entry. Hey guys, this is going to sound ridiculous, and it certainly isn't meant to be. Whoops, wrong one. Everything says down. Everything is strong. You're coming from a good top. I love all of these conditions. You even let it break the area. So you're right. That's a good entry. So where did the challenge happen? The challenge happened when you let momentum get you in, but you refuse to let momentum or a loss of momentum take you out. Does that make sense? I love your entry. But if you're going to get into a trade with momentum, doesn't it stand to reason that that divergence, that loss of momentum should be an exit indicator? Or maybe even on this style trade, because the likelihood is that it's pulling back to a trend trade. So you've got to create a management plan for these trades. Guys, I love the momentum trade. I don't take them personally, but I like watching you guys take them. But if you're going to use all of this momentum to get in, you've got to be willing to accept that a loss of momentum is a beautiful exit condition. Does that make sense, Insaya? I don't know if I'm saying your name right, but I hope I am. Yeah. So every great entry creates a manageable trade. So once you start taking those consistent entries, you're going to refine the process down and you're going to learn how to manage it. When you do that, when you take this trade right here, Tim, I'm trying to be greedy every trade that I have. But the challenge is you have to have reasons, right? Guys, greed's okay if you have a pattern that allows you to be greedy that wins more than it loses. The problem is, and Tim, let me show you. When you have all this momentum and it's directly into a termination condition, right? It's probably going to close back and do some stuff. So once again, here you're trading into the area. You're not trading beyond the area. So these two are different. But if you get in on the momentum trade, that reversal bar is a loss of momentum. It's literally going the other direction. So in say I think we could keep a lot of money in the till here with a little bit of management. But do you see how, and let's get rid of some arrows and say, I just want to point out one more thing. We're not coming from a termination condition, right? And you're trading directly into a mid-band, directly into resistance that the trigger lines haven't broken. So you're trading into this termination condition. Yeah, Tim, for sure. And I think that's the biggest mistake that all of us make, right? Is trading into it. And then in say you're going short with these small triggers off the termination. And look how you get out before anything bad can happen. Big difference, right? So management, guys. Management is great. And then the other thing, I can't stress this enough. Do you have rules for the trade in Saya? Do you have some like a list of things that you're looking for to get into this trade? Or do you just look at it and go, oh shit, time to go? Pardon my French. Because if you have rules for the trade, write them on your chart. Not for me. I can tell exactly what you're doing. I have no challenges reading a chart, guys. I've been doing it for years. But if you write on the chart and you come back and you annotate, why did you get out all the way up here? Well, then we can work on fixing it, right? Why did you enter before the area break instead of waiting for after it to break? Then we can work on it and we can turn these trades into higher probability trades by embracing advantages. So great job posting. I like what you're doing. I think you're on a great path, and keep focusing on the management. Go back and look at your trades and ask yourself, how could I have managed them better? Termination, Gary, you had the 50-50, so you took the pullback and you let all that momentum carry you down. And then you get those weak triggers and divergence and you exit. Gary, great trade. Nicely done. And I like this one because it's not odds favorable momentum right into a fib. It is coming from a great top. It's coming right from resistance that held. But you have that divergence. And the most important thing, Gary, are those strong triggers up. Do I have some NASDAQ traders in here? Gary, writing your rules isn't enough, right? You've got to follow them. So if I were going to take this trade, this is one of the biggest things that I see on the NASDAQ, is when the small triggers are up strong, guys, they tend to act as support like this. They were a full bar away. It creates a management opportunity. But if they bounce and come back up, you've got to wait for a more conservative entry. And sometimes it doesn't come, and it keeps you out of trouble. So nice job. Yeah, the rules are only as good as your ability to follow them. That's one of the things that I realized about myself, is I can write the best rules ever, but if I don't follow them, I get my butt kicked. Trend trade NASDAQ question. You notice the NASDAQ pullbacks. A lot of time pull through support, continue to move up. What are your thoughts on this? Please see arrows. Well, PFI, do you want to know my first thought on it? It's a termination condition. So do you think that this fib had anything to do with that bounce? And then let's look at the next part of it. I see your large triggers. Where are your synthetics? Your synthetics are all the way down here, right? Which means that it may close a gap. So you don't have favorable. You have a giant split between, your window of opportunity is ginormous. So how do you handle that? If you're going to take this trade into a termination condition, you can wait for a close on the correct side of the small triggers, right? Or you can say it has to go to the synthetic. So you have to create a rule. But I'm telling you right now, guys, if your NASDAQ trading is based on hope, it's going to kick your ass a lot, because a lot of times termination conditions create giant bounces, giant untradeable bounces on the NASDAQ. Look at that. Crazy bounce, right? There's no such thing as a KISS plan for NASDAQ. NASDAQ is not an easy market to trade. NASDAQ has a bunch of scenarios that'll absolutely wipe you out. And if you're not comfortable reading your charts in a second's notice, NASDAQ will destroy you. Just saying, from experience. But when everything is perfect, your stops are a little bit bigger, but it bounces right off the areas inside. The problem is most of you won't wait for this trade. Most of you will try this one over here and get run over in the indecision, and you'll try this one here and get run over in the indecision, right? NASDAQ moves fast. Whoa. Synthetics are up here, larger down here. That's horrible looking. That's a tough look. So PFI, I love the NASDAQ. It's all I trade. But start with the rules being met. And that's going to be a great way. If you write out your rules, I'll critique them all day long. Absolutely. But here's the deal. Just writing out your rules isn't enough. Guys, if you want me to help you work on a plan, so PFI, if you're serious about it, and you say, I don't need high probability trend trades, and I don't need 50-50 trades because I'm a rock star. I need more. I got to be busy because my brain won't sit still. Take this right here. All right? So guys, anytime you add a trade, write your rules. That's not enough. PFI, show me 10 pictures that look exactly the same that fit the rules. And it's not for me. It's not me, oh, I'm not going to help you if you don't give me these. What it is it's you showing yourself exactly what it's supposed to look like. And Insea, please forgive me for doing this. But let me show you guys something. These are 4 different looking entries, aren't they? So these are 4 trades that are believed to be the same, but they're 4 different looking entries. So how can I be consistent if my entries continually look different, right? So PFI, you have the burden of proof when you create a plan. You have the burden of finding 10 that look exactly the same so that you can gauge whether or not they create a statistical advantage. Jose, 50-50 from a good top. Jose says, I like this. It didn't quite reach. Odds favorable, good top, takes the entry, and you get paid on the way down. Jose, that's a brilliant trade. It didn't quite reach the area, and there wasn't divergence. So Jose says, hell yeah, give me the trade. One divergence doesn't scare him against all that momentum. Great, smart stop placement. Beautiful trade, Jose. That's the market giving it back to you for messing with you on that last one. Nice job. And it's still an ugly 50-50. That's not odds favorable momentum. Guys, that's the look that smashes through areas. This is the look that has a lot of trouble. Great recognition, Gary. And one of the hardest things is just saying, it may not be my trade. If my triggers aren't their strongest and my areas are outside, it may not be my trade. But PFI, do you see how strong the small triggers are? This is something that's important for NASDAQ, is these strong triggers will ruin your day all the time. Now we have odds favorable momentum. Now the market's going up. The triggers are strong. The path is clear, right? We're just kind of looking and waiting and hoping. So one thing, if you have my spreadsheet, ladies and gentlemen, is I put a section in there for NASDAQ. So if you're beginning to trade the NASDAQ, it makes sense to take pictures, to annotate charts. And let me tell you how my NASDAQ trading went. So John Novak, my brother, gets super excited about trading the NASDAQ. He's like, Mark, there are so many opportunities in here. And I was on an Apex account, doing great. And I said to myself, heck yeah, I'm going to add the NASDAQ. Because I'm so good on crude and ES, because I'm so comfortable with my plan there, I'm going to trade the NASDAQ and I'm going to be like John Novak. And John spent 3 weeks simulating it. I spent 3 minutes agreeing to it and then getting into it with my Apex account. And I blew out the account. And then I blew out my next account. And my next one, and my next one, and my next one, trying to learn how to trade the NASDAQ on my Apex account. So this is like a cautionary tale, right? And then I had to do the research, guys, and I had to go through and I had to recognize the patterns that were bringing me success. Does this sound familiar? I had to go through and I had to recognize what was easy. And I had to recognize what worked. And I had to recognize what didn't work. And guys, I'm telling you, I took 100 pictures. And what I finally realized on the NASDAQ is that the small triggers win. Even when the rules are met and the small triggers are this strong, they're going to kick your butt more often than not. And I had to take this picture over and over. And I've got so many pictures that say the smalls win. And I've got so many pictures and I took so many losses. Guys, this is how plans come to be. So if you tell me, Mark, I'm trying to be a NASDAQ trader, right? Then we're going to talk about it. Look at how strong the smalls are coming into the area on the 50-50 trade. My study kept me out of this trade. The study gave me an advantage. And a lot of the times, it's not the winners that you take, it's the losers that you avoid that create all these opportunities. Alan, beautiful. Everything says down. You wait for the reversal bar close, and both targets hit. Great advantages. So, Alan, let's talk NASDAQ. You had one line this trade was likely to originate from, right? Do you see how far away your small triggers are? Once again, all the pictures that I took, when the conditions are perfect on the large chart and my small triggers remain a full bar away, and Alan, this is your picture actually that I clicked on. Look at your entry and look at your best spot. So let's repeat the lesson. When those small triggers are a full bar away, it gives you reaction time, right? It gives it the ability to come back to tap those triggers. Your risk is minimal because you wait for the best entry. So what you'll find is when those smalls are lagging, they're super far away, you can get in at that best area. And then when you get there, your risk is already established, right? You're already in a good position. And price typically closes back to those small triggers, especially when the conditions are perfect on the large chart. Does that make sense? Yep. And guys, I did it this morning. There's the perfect 50-50 trade. I posted this in the room earlier. This will be easier though. Everything says down. The triggers are the strongest. This is for my NASDAQ traders. Everything looks good. Strong triggers, no divergence, area inside, coming from a good top. All my rules are met. All the criteria is there. But my small triggers are above my reversal bar marker. So I took the picture in the moment and I said, be patient. It might go higher. And I just followed this one. Still inside the window. Triggers are still strong. And Alan and everybody, Gary, whoever else is in here trading NASDAQ, PFI, as you learn to trade the NASDAQ, do you see how those strong small triggers act as support and the market pushes higher? John Novak and I talked about it this morning. He goes, I wait for a down bar. I wait for a close on the correct side of the triggers, personally. And look at this. I had to stop waiting on the correct side of the small, and this will be my close below the smalls. And if it doesn't happen, there's no trade. I had an order waiting for price to get to the other side of those smalls. Had it locked and loaded. I still have the look that I want. It never hit it. And look how the smalls act as support again. Those strong smalls win again. NASDAQ traders, this will eliminate getting run over by 50%. And then ultimately it goes beyond where I'm not looking for the trade anymore. So this is awesome. And they're at the top of the chat box for the day. But guys, this is the kind of study that we do when we create a plan. So PFI, as you begin looking for these momentum trades, you should be snapping pictures every second along the way. You can annotate them after, right? But you should be snapping tons of pictures, and you should be searching actively for the patterns that bring you success and the patterns that don't. Pretty neat, right? Bad bottoms love to finish the move. Did this one set up? Now we're just going through charts at this point, guys. I'm going to take 5 minutes, but strong triggers, clear path. The area is a little bit outside, which means that with all that momentum and a clear path, you fudged a little bit on your entry area. It's not small triggers lead the way, Tim. Not at all small triggers lead the way. Are you trading NASDAQ, Tim? But I will go over it again, absolutely. And this is for NASDAQ, guys. This is a NASDAQ scenario. And it's important that I stress that because it's different on crude oil and it's different on the S&P. This is something that I find to be pretty unique to the NASDAQ. So, Tim, the language I always use is let the large chart lead the way, right? Let the large chart tell you that there's momentum. Let the large chart define your direction. Let the large chart define your areas. And what I was talking about was on the NASDAQ, one of the things that you'll notice on the NASDAQ, and this is really kind of exclusive on the NASDAQ, is that if the small triggers are coming against you strong, they tend to win. So it's not that the small triggers lead the way, it's that I'm not going to fight the immediate strength. So if you graduate into the NASDAQ and you start looking for it, that's just a great way to keep you out of a lot of losers. Because I got run over about 700 times when I first started. So it became helpful for me. But if you start looking on, let me see if I can find, well, that one was a full bar away. Let me see if I can find one like on crude oil or on the S&P. Well, shoot. This one all has small triggers a full bar away. There we go. Everything says up, but the small triggers. So unlike the S&P or crude oil, it's not quite as important as it is on the NASDAQ. I hope that helps. I hope that clarifies. It's kind of NASDAQ-centric. All right. Medium probability, 50-50. You have two divergences in split triggers. You enter after the close. It increases risk, right, Alan? But here's where conviction comes into it. You ended up with a third divergence. And that should be an exit condition, right? So you knew you had the divergence potential, and it printed. You just jumped the gun on it a little bit. So Alan, let's talk about another potential entry. Whoops. You'll love this. Oh, where'd your picture go? Here we go. And again, this is a NASDAQ lesson, ladies and gentlemen. This is a NASDAQ lesson. If you're uncomfortable with this much risk, and that's okay to be uncomfortable with that much risk, Alan, you can say, you know what? I'm not going to take this one. I'm going to let my small triggers roll, and I'm going to look for the stab back to it. And this becomes a pretty conservative entry. When everything says down, when the rules are still met, letting those small triggers roll, and if they line up at the area you're expecting to hold to the downside, this becomes a great entry, right? Then you can get in here, your risk is minimized, everything says down here, and these small triggers have already rolled. That immediate momentum is already pushing down. And let me show you a picture for it, because you can use this same idea. Let's say that you're looking for a high probability trend trade, right? And then those three divergences print on you. And you're like, oh, it's probably going to push down. But the rules are still met. Looking for that roll creates an opportunity. You're still letting the large chart lead the way, but it creates a little bit of an opportunity for you to still take advantage of your awesome chart read. And this was cream white. You're fighting back. You're welcome, Alan. So, cream white, talk to me about the long. Can you tell me which of the most basic rules were broken? We're going to talk about that one first before I give you props on the next one. The trend is up, right? I like it. The trend is up. What direction are the large triggers? And if you write rules on your chart, cream white, I know you guys don't believe me, but if you write rules on your chart, it's going to keep you from doing this stuff. So if the triggers are down, can I have odds favorable momentum to the upside? No. So watch this. So if you took a second and you made this a part of your process, odds favorable momentum? No. Let's go to the next one. Price reached resistance. Did any trigger lines get above it? Clear path? No. And just for grins, yeah, you know the answer. So, guys, I know it's exciting. Trading is exciting, isn't it? But wouldn't it be awesome, cream white, if you just had this printed out on your desk and you said to yourself, holy crap, I'm breaking every rule. This one's probably not going to work. Right? And if it does, it's because I got lucky. But if you go through that process and you talk through it, so let's see how much you lost on this one. Let me make it a little bigger because I have hold eyes. So you lost 6.5 points, which is 150 times 10. So I'm going to round down just so that it doesn't seem so ugly. So you lost $1,500 on breaking every rule. So let's go to the second part of it. Everything says down and the path is clear and you didn't wait for the pullback. Right? You didn't wait for the pullback. But what you did do is you doubled up, so you're gambling scared, but that's okay. So the first one, you lost 1,500. And this one, you made $50 each. You made $500, right? So you lost 1,500, breaking all your rules. Then you got scared and took the right trade and jumped out for 500. So you're still negative 1,000. Does that sound about right? And I'm not doing this to beat you up, but I'm doing this because I'm about to give you a lot of hope, right? I'm going to give you something that is going to it's going to change your world. What if you use that checklist and you learned to omit that $1,500 loser? Then you have a $500 winner. Does that make sense? But what happened is the rules breaking takes away trading with the trend. It takes away trading with momentum. It takes away the advantage trades, and it robs you of that money, and it pulls it right out of your account. So I'm a big proponent that winners are amazing, but avoiding losers, avoiding unnecessary losers is how you're going to make money consistently in the market. Does that make sense, Dwight? And let me tell you, nice recovery. You're in too low. Use those areas. Because this one, you could have made a lot more money jumping out right there if you just wait for the pullback to get you back to the area. So great job, dude. Way to keep your head in the game. Way to not sit around and huff and fume for an hour and a half, mad that the market took your money. And way to get back in the game and take that trade. 1750 on this one? How do you figure? You only made 1.75 ticks on 20. Okay, so how much is 1.75? No, so 1 point is $25. Right? So if you had made 2 points on this, you would have made $50 a contract. So you made $17.50. So my math stunk. I'm not a math guy. So your net $250 on those two trades. Okay. So your net $250. And then what's 30 times 8? There's your commissions for the two trades. You're up $10, Cream White. You can supersize today. But do you see how that works? Awesome short. Great job trading with all the advantages. Let's just eliminate that ugly long, right? Let's eliminate that rules-breaking long and let all of your brilliance get you paid. Nice job. I love lessons like that because these are the same lessons that I needed. Everybody needs these lessons. All right, Snorri, you're going directly into a termination condition, but this great entry creates a manageable scenario, and you're reducing risk quickly in case it decides to come up against you. Do you recognize it, Snorri? Does that sound like a fair assessment? You don't have any rules written on the chart, so here's what I see. I see a downtrend. I see your smalls down, I see your large down, and I see one thin little blue line that the price reached and absolutely no trigger lines broke. So I know it's a termination condition. Your ability to use that area of resistance as your entry point gives you virtually no risk. and you're not willing to give it all back in the event that termination condition works. Snorri, beautiful trade. Is it a high probability trend trade? Of course not. It's into a termination condition. But is it an amazing chart read with some nice management? You better believe that it is. And I think that the most important, profound thing that we can talk about with this trade, guys, is that he knows it's not a clear path, and he's not relying on hope. If this were a clear path, you hit your 100 and then it went break even. Perfect. Do you understand that that was probably why it didn't go to the target? So what a great example of how, when everything says down, maybe you can get that last little ditch effort and not sit there and be greedy and hope. Just take the money. Nice job, Snorri. Life gets easy when all of your indicators agree, guys. Jared, same one everyone's taken. You're in at the resistance. It's likely to hold. It's not inside of favorable large triggers, but it's an awesome chart read. Everything is down. Momentum is there. The path is clear. Guys, can I give you an example of how your ability to read charts is going to pay dividends for you? Let's talk about termination conditions. If price reaches an area, in this case Fibonacci support, and all of the trigger lines are below it, isn't this a termination condition? Isn't this an area likely to stop the market? Give me a why if that makes sense to everybody. Because this is going to be some next level stuff for you as you start looking for more opportunities. Guys, this area is likely to stop the market. And then let's look at this. I've got odds favorable momentum. I've got a clear path. Every indicator on these charts says down. Is it worth a small risk entry right at Fibonacci resistance with odds favorable momentum with a clear path to get down to that next area? I love it. Jared, the only thing I don't love is that you're trailing so tight. The market is a fluctuation. The market is a representation of fear and greed. And on this small chart, you're going to get fluctuations all day long. Your large chart said down. Your large chart said odds favorable momentum. I'm not sure what happened, but a likely scenario is that it pulled right back to those small triggers and then worked its way down. What market was this? S&P? There was, I didn't have a fib there. Oh, look at that. It pulled right back to those small triggers and then it went down. Didn't it pull back to an area of resistance inside of favorable large triggers, Jared? Here's a great lesson. Do you guys remember that conversation when we talked about put your stop where the market shouldn't go? This is a great management lesson for you guys. If I have odds favorable, if I have no terminations, if I'm taking my entry up here, doesn't this qualify as an entry for a high probability trend trade? Give me a why if that makes sense to you guys. There may be trades within the trades. So if I'm in this trade and every rule is met, this becomes a potential entry. Does that make sense to everybody? So if this is a potential entry, any stop that I put right here is likely to get run over. My stop has to be up here where the market shouldn't go. That's an awesome lesson for you guys that are working on your management. And do you know how I got so good at this lesson? because I messed it up 1,000 times. It's a great trade, Jared. Nice job. Just a little help to hopefully get you a little more out of these. 5 ticks is tight. Odds favorable, clear path, perfect entry. Got murky, got scared. Got out when you saw momentum waning. All right, cream white, PFI, same lesson. And this is for everybody. This is an entry chart. Isn't it? This is an entry chart. PFI, was momentum waning or was momentum odds favorable? This is that reminder that we all need. Large chart defines direction, momentum, and areas. Small chart's an entry area. Your entry is beautiful. Your risk is perfect, right? So you blew through 10 contracts worth of commission. Just let it run, man. Let it run. And guys, 10 contracts on sim, it doesn't matter. You got back in, that's cool. Then you got scared again. You're going to kill yourself with this sort of in and out. You're going to kill yourself with this sort of in and out. Because on the wrong trades, you're going to get in here, and then you're going to get in here, and then it's not going to work, and you're going to get in here, and then it's not going to work, and you're going to get in here, and then your trend is going to change. You're going to try and go long, and then it's going to do exactly what it said it was going to do. So guys, if your management is fear-based, your entries are going to become fear-based to support that management plan. Potentially. I can't see into the future. Great entry, though. Nice job. And then Jeremy P. Everything says down. You let it clear the areas, and you take the stab back to the 1-to-1s, and you take quick profits. And every chart agrees. Jeremy P., nice trade, bud. Good to see you in the room. Everything says down, right? And you're like, I don't need to be greedy. That's 4 contracts. That's a beautiful trade, man. You missed the high price. That's okay. But the best lesson here, and this is for my new users that are watching, on Jeremy's chart, every indicator is pointing down. Every indicator is pointing down. And the market went down. There's a great lesson there. All right. Cream White, I'm going to ask you to do me a favor. Oh, that's just the second half. So check this out, Cream White. And this is for everybody too. Just to, because I'm old and my eyes are tough. When you give me a chart that looks like this, it becomes difficult for me to discern what happened. If you click this capital F, and I know that when you're brand new, you get excited and you squish your charts. But if you click this capital F for the picture, it's so much easier to read. And that's just me being a little bit selfish. Absolutely. Snorri, perfect read. Termination condition creates the full reversal. And then that recognition that just because it's a reversal from a good bottom doesn't mean that these are obligated to break. And look at all the areas that haven't broken yet. Upper right-hand corner, Cream White. Check it out. If I squish, that F shows up. If I click the F, it brings me back. It's easier than trying to manually scale, but if you just bring it back for the pictures, it's an easier read. I'm picky, aren't I? I just realized that. Show me all of your work, guys. And then Snorri, exactly. Great bottom by definition, but just because it's a good bottom, this area isn't obligated to break. Right? It might be a good bottom, to get you right back up to that next termination condition. And this is where new users get excited. I want you to see something. It's not just that that's a termination condition. These 1-to-1s are a termination condition. This fib right here is a termination condition. This fib has the potential to break with momentum but isn't broken yet. Hey, Tim, have a good one. Thank you so much. And this divergence low still has large triggers below it. Do you see how many areas, if you decided to drive along here, do you see how many areas you would be fighting against? And I'm not saying that that's what you did, but these are the things that I look at. Termination conditions are amazing, guys, but they will get you to the next termination condition. So weak triggers, no momentum. That's not our best look for shorts. Crude oil, there's your termination condition. And then Snorri, see how your smalls are starting to break through? Whoops. So if we can get those small triggers north of Fibonacci resistance, it puts us into that 50-50 scenario. It puts us into that, well, now these areas have the potential to break. Now my triggers are starting to lead the way, and I'm coming from a good bottom. So if these smalls get above resistance, there's a good chance I'm going to look for an entry over here. Because that good bottom, that's exactly where the sellers wanted to go, isn't it? Look at that, to the tick. And now we're seeing that reaction off of support. Now the smalls are through, but the large aren't. And if I get a pullback, order pending. There's the top of my window. And that's how quick analysis can happen, guys. But to the tick, this is the part that I want you to recognize. To the tick, Fibonacci support. Order canceled. Oh, Paul, I thought you left us. Tough couple weeks, so you're jumpy. Probably because you know this first one is questionable, but it did make it to the fib. Just end of summer travels? Awesome. Well, it's nice to see you back. So, Paul, what's the challenge on this one? It's a 50-50, right? It's ugly. It's not even your best look on the 50-50. So you get in. Where are your synthetic triggers? Did you ditch them? You just load the template? It's not working for you? So this one you get in, and man, it just about gets you high tick. And Paul, I don't disagree with this trade. You took a good shot at a medium probability, right? And it got you. And then you get back in as it's coming down, and then you just kind of panic a little bit. And it gets you out with the divergence, the second divergence on the 50-50. And that's just a hard one. And Paul, I think one of the things that you can do is when they're iffy like this, is just let the small triggers roll and look for that little stab back to it. This is kind of like what I was talking to Alan about earlier. If you're saying to yourself, I'm just not sure, right? I don't know if it's going to be here or here or here. And I'm in that it's not the best look, so I'm kind of freaking out about it. It's okay to let those small triggers roll and then look for your opportunity when everything really starts to go in the direction. Does that make sense? I think it's the right look and it's the right idea. And that first one was a challenge. That first one, they just got you. They were assholes, right? But this is your high pivot. This is where your stop belongs if you're going to take it. And it just creates a little bit of problem because you got in so low. And guys, they're going to high tick you every now and then. You're going to take the perfect trade and they're just going to go, you know what? I bet this is where people have a stop. And they're going to seek it. They're going to hunt it. Whoa, that's pretty, isn't it? What do we think about that one? Does anyone else get goosebumps when you realize just how effective the plan can be with momentum and a clear path and that little pullback? And then Alan, small triggers were more than a full bar away. NASDAQ traders, small triggers were a full bar away. Get in at the area with all this momentum. Does that make sense? This is for you NASDAQ guys. When these small triggers are a full bar away, I'm in at the area. Awesome. You knew it was going from a good top. So you got in a little early. Let me just see what I'm looking at here. You're moving stops pretty quick, Paul. More than you usually do, right? Usually you say, with this look, I'm staying behind here until my target gets hit. All that momentum, it didn't reach the fib, no divergence, perfect entry. You are a little jumpy, my friend. And I can say that because I've been watching Paul trade for a year, and I know that he's usually a lot more calm and collected than that. And these are the trades where he gets paid all the way down to the fib more often than not. Ooh, have fun with that. Alan, great job today. Thank you. Thank you for posting those pictures, man. I hope the dentist is good to you. I don't know, Gary, I am 10 days back. I just beat you up extensively. Not necessarily a good top, right? It's not coming from an area. But you've got odds favorable, cranking. Those smalls are miles through, right? The large triggers are already breaking through. There's no divergence. And Paul, you take the perfect entry. Right there at resistance inside of favorable large triggers. Maybe a little low, but that's a great entry, right? So your stop, Paul, based on your history, is right here. Would you agree? That's where you place your stop. With this look, dude, that's totally you. That's everything that you do. And you never let one divergence get you out. Not when it looks like this. So you made a choice today. It's a little emotion. That's all it is. It's a little emotion because maybe you had a little trouble. Everybody has a plan until they get punched in the jaw, right? So if you have a bad couple days, guys, it's going to punch you in the jaw. And you're going to start managing with your gut instead of your plan. So, Paul, the only thing that you really have to do with this one is what changed other than one divergence. Your stop's still in a great spot. Everything still says down. The area still hasn't been reached, right? Really everything is still in favor except for the one divergence. But because of these two, that's typically where you hold. So, dude, just take a deep breath and realize that you're really good at this stuff. And look at and read over your exit criteria, right? Because I do that all the time. I read over my entry criteria. And I don't know if you guys do this. So I've written a plan. I have a written plan. Guys, I rewrite my plan almost every morning in front of me. My entry criteria, I rewrite it almost every morning. I flip the page in my notebook. Here, do you hear it? These are the pages of my notebook. And I flip the page and I rewrite my plan. What am I focused on today, Mark? This is what it's going to be. How am I going to manage it? This is how I'm going to manage it. And what happens is I go into the day ready. And then cream white, bigger stops don't create bigger wins. You know this. Everybody knows this. What do bigger stops create? Bigger stops create bigger losses if it's going to lose. So, right from the glossary, do you know that I'd never heard of FOMO until I was teaching this class? The fear of missing out. But I like the way that it's worded in here. And I don't know if this is a John Novak original or he copied that from the internet, but whatever he did, it's pretty smart. The fear of missing out can cause investors to make riskier choices than they otherwise might, right? Like bigger stops. This includes getting in early with a much larger stop than is warranted, which does not guarantee a win, only a bigger loss, or getting in late without the proper advantages. So I think that it's imperative and awesome, Dwight, that you recognize that this is one of your challenges. The fear of missing out is one of your challenges. Does anyone else other than Dwight and me have a fear of missing out? I've kind of squashed mine at this point. Anyone else? You're like, but what if it goes without me? All the time, right? Do you know what the easiest way to work on that fear of missing out, ladies and gentlemen, is trust. Is to have trust that the trade that you just took wins more than it loses. How do you develop trust? You develop trust through repetition. And you also trust that yours will eventually come, right? Has anyone other than me, guys, I spent 3 hours watching the market yesterday. 3 hours of watching the NASDAQ yesterday, and my personal trading rules were met one time. And that's it. I would rather not be in the wrong trade than, or no, what is it? I'd rather be in the right trade and lose than be in the wrong trade, because at least then I had a statistical advantage, and that didn't come out very eloquently. But developing trust. Guys, do you think after 250 pictures, you're going to develop a level of trust? Probably not the one that you need. But what do you suppose your trust level is going to look like when you reach 5,800 pictures? And guys, this doesn't include the 7,000 that I had to delete. And John Novak has nearly 30,000 pictures, guys. So trust is a process. It's just like dating, right? You don't trust her in the beginning. You're not leaving your wallet on the table. It's not even a potential termination condition, Snorri. It's a termination condition in the moment. So guys, don't be in a hurry. You're going to get there. What's another way to develop trust? Keep it simple. Don't give yourself 50 things to think about. Give yourself the best to search for, right? Because the more options you give yourself, high probability trend trade, medium probability trend trade, momentum trade, HVA trade, gap trade, counter trend trade, edge trade. Oh my gosh, you've got 5 or 6 rules for each of them. They're swirling in your brain, and you will begin to combine them, and you'll find that you make all the mistakes instead of just some of the mistakes. So keep it simple. And Snorri, do you see how the triggers haven't quite made it? And you can see the bounce that it creates there. And when you've got the triggers not quite through, like that, and then there's those divergences coming with it, it creates that bounce, yeah. Don't even think of it yet as a potential top. And I say this for a reason. Because, Snorri, if I think potential top, what am I pulling out of the equation? If I'm telling my brain, and I'm not saying that you're doing this, if I'm thinking potential top, if this breaks, I'm not looking for the long. But even more importantly, if this goes red, I may try an ill-fated short. So I love the idea of simplicity. What is it? It's a term. Don't let it be anything else. It's a termination. This was just a termination condition. In the moment, that's all it was. And then that termination became a good bottom. But I wasn't worried about whether or not it became a good bottom. I was waiting for the reaction. It's either going to break or it's going to hold, right? And it's pulling all the way back to the midband. It's pulling all the way back here, and all those triggers are still up. So I'm not thinking top thoughts yet. What I'm thinking is there's not a darn thing for me to do. My advantages aren't present. And it stinks sometimes if there were no opportunities to get anything on it. And sometimes that market's just going to run. And it's just a part of it. It's that patience. Does that make sense? Stop. I don't want to stay in drawing mode. There we go. And that's just a little psychology, how the brain messes with you. All right, so let's look at this one. And this is why NASDAQ is a different animal. My goodness, I'm struggling with these drawings. Look at where this came. Guys, if you took the first long, it doesn't break out of those large triggers, right? But then 3 divergences shoves it lower. And then it starts to go up. This is one of the ways you can use those 3 divergences, saying, okay, I just have to be patient. Everything's not perfect anymore. And you see that a lot. And now there's a 4th divergence, right? And those triggers are getting weak. It wouldn't be uncommon to see this market retest support. 3 divergences and weak triggers can push the market lower. Weak triggers in the middle of nowhere, it may come and retest, right? I don't have advantage of momentum. Don't have the advantage of momentum here as well. If I took the midband for some reason, it stops me out. Weak triggers for the win. And then Snorri, we're still waiting to see, right? Is it going to be a top or is it going to push up? My trend is up, my large are up, my smalls are inside. And I love this because there's that patience piece. If you just admit that you have no idea what the market's going to do, I don't know if somebody with a truckload of money is going to dump it into the market right now. I don't know if somebody went short right here and then took profits right here, so it pushed back up and they're just going to double dip and take it again. And that's it. You start to see everything. And you start to trade your reads instead of your rules, right, Paul? And guys, this is why rules are so important. Your chart read identifies your rules being met. It's not the other way around. Yeah, and when you stumble a little bit, you just work it back in. Let me show Ron's favorite picture here. He named him Norbert. These are the guys that control the market, ladies and gentlemen. These are the guys that create trends. These are the guys that react to these key Fibonacci areas. These are the guys that create the advantages so that we, the smaller independent trader, can get into the market. And we can be remoras. We can be these guys that just follow around and let him do all the work, right? So this guy said potential top. This guy said, look, a red fib. I'm going short. And he's going right down the gullet. Paul, can I be honest with you? I do too. I still have days where I wonder what the hell got into me. I still have days where I take 4 losers in a row and not one of them fit my rules. And I have to say to myself, whoa, you're not trading your plan, Novak. Slow down. And there you go. They wanted it to go up, didn't they? So I think that was a great lesson. And Snorri, thank you for posting that picture. It's not that you were wrong at all. It is a potential top. It had the potential for a great top, but that potential kind of went away. So I wasn't thinking shorts yet. Keeps me out of trouble, and I know that it's too soon for longs, and that keeps me out of trouble as well. In a position waiting on the retracement to fill your... No. Tell me your rules. Dwight, write your rules on your chart. I'm not going to give you any criticism at all. What I'm going to give you is a chart read. Not a good bottom because it's not coming from an area, right? My large triggers are not wide and angled in the direction of the trend, so I don't have odds favorable momentum. If my large are down here, or my synthetics are down and my large are up, there's absolutely no way that I can have favorable large triggers. And I don't have any areas where your order is. So cream white, once again, if you just use your checklist, what do you think about that trade? I'm not saying that it's not a trade, but why are you getting into it? If you don't write why you're getting into it, how are you going to be able to analyze it? 50-50 what? You don't have odds favorable momentum. The large triggers are not wide and angled in the direction of the trend. You can even see it over here. They're flat. They're pinched. There's absolutely no momentum. So if it's a 50-50, odds favorable momentum breaks areas. Not sad little weak triggers. So there's a great lesson for you. Absolutely. Thank you for having the courage to post. But don't ever post your pre-entry and expect me to tell you whether or not it's a trade. I can't do that. It's illegal, and I have zero desire. So Snorri, great question. Not strong large trigger, but have turned green. Is this a good bottom? It's not. Because it's not coming from one of those areas that behave as a termination condition. And let me show you what I mean. When I talk about a strong top or a bottom, guys, when we identify it, it needs to be a termination condition that creates a full reversal. Does that make sense? And in order for it to be a termination condition, price has to reach an area, and then that creates a full reversal. So what you're looking at right now, Snorri, is we're not coming from one of those key Fibonacci areas. Actually, all of your triggers have gotten below it. So since this technically isn't a termination condition, this is a pivot with a loss of momentum, I can't have the rules met for identifying a termination condition. Give me a why if that makes sense to you guys. And then just to elaborate a little bit on it, if you're concerned, because those are purple 1-to-1s down there, but the trigger still kind of went through it. The areas that may reverse the market that we give credit, the purple 1-to-1s don't fall into that category because they're small swing trades or small swing 1-to-1s. They're not as significant as these areas that I'm posting in the room right now. So we're looking for a no triggers through termination condition to create that full reversal. And then we can identify it as a good top or bottom. And here's an idea: when the smalls break and the large don't, not a good top or bottom, right? Just kind of pivots within the market. And when everything kind of pulls through, not a strong bottom. It can still reverse the market. And that's kind of what you're looking at there. That's not necessarily a strong bottom. And then just because it's a pivot doesn't mean that it's a termination condition. So we're going to use that idea that price reaches the area. Great picture, great question. You can still have a great trade without it, but it sure is nice. S&P, everything says down. The path is clear. The momentum is strong. The entry is beautiful. Andy, and you get paid. Nice job. Great trade. Taking every advantage, every great chart read, and capitalizing it and turning it into cash. Did get a down bar and then channel surfing. Clear path, but weak triggers. Multiple divergences. Say weak triggers. Look at Gary's triggers. And I think this kind of compounds a little bit, Dwight, what we were talking about. Look at how flat those triggers are. It's impossible to have momentum with flat triggers, guys. They're a momentum indicator. They need to be strong and in the direction. And sometimes that little recognition of everything being flat is just what you need to keep you from forming an opinion. And sure enough, off they go to the upside, right? A lot of great lessons happening in class today, guys. A lot of great examples. So, Gary, there's your 3 divergences in the same location that said that these weak triggers might push lower. There's one more divergence allowing you to recognize that these weak triggers are, in fact, dying. And look what it does. Now we're at the mid-band. The large triggers are more than a full bar away. It's not a long trade, but we got to see if that gap theory is going to pull it back, right? But you see how the weakness precedes the reversal? Odds favorable momentum, ladies and gentlemen. It's a wonderful, wonderful advantage. So, Atif, how are we doing on day 2? A little more clarity, I hope. Walker, Chef. Every day it should get a little bit better for you. Every day clarity comes just a little bit stronger. And what you're going to find is by the end of the first week, you're like, oh my gosh, I'm pretty smart. By the end of the second week, you're like, I'm brilliant. And then on the third week, you're going to be like, oh my gosh, I don't know shit. Pardon my French. This is my favorite. This is the experience curve. Everybody gets here and it looks like fun. Everybody wants to be a day trader, right? And this is your first day. It looks like fun. And this is your first day as well. You're like, whoa, there's a lot to digest. And this is normal. That elation turns into, oh my gosh, what did I get myself into? And then by the end of the first week, you're right here and you're like, okay, clarity is coming. I feel good about it. My chart reading is getting good. And right about 30 days, you're going to be like, I've got it nailed. And this is when you go live too soon. Guys, this is the exact point where I went live the first time. I was separated from $5,000 in about 22 trades, and I had no idea why I won or lost. I had no idea what just happened. All I know is that it all went away fast. And that's where you're like, uh-oh, I'm not sure. I'm not following a checklist. I don't have a plan in place. And now I don't know stuff. There's not enough asterisks there, but I don't know stuff. And this is a defining point in everybody's career as a trader, guys. When you realize that you didn't give the education everything that it deserved, when you realize that you didn't fill out your spreadsheet, that you weren't participating in class, right? This is when you realize that all of those things that I begged and pleaded for you to do on your first day, that it's time to start doing it. And if you really want that trading career, if you really want to do this instead of going back to work, that this is where you're going to develop a plan. This is where you're going to start participating. This is where you're going to start asking questions. This is where you're going to record everything that you do. And this is where you're going to decide, I'm going to keep it simple and focused so I can be great at this. And guys, this is where you and I become best friends. This is where you and I develop a relationship where you understand that I will support you every step of the way, that I will take everything that you do and I will tell you what's great about your chart, because I love to celebrate the small victories, but I'll also tell you where your challenges lie. And I'll nudge you in the direction of success every chance that I get. And you've seen it a lot today. We've seen a lot of trades with problems, right? And I try not to be a jerk. when I point out the problems, and I try to tell you how to circumvent those problems so that you can create more money. And I tend to be a very straight shooter. I will sugarcoat a little bit because I don't like hurting feelings, but your feelings are your responsibility. My responsibility is to tell you what you did right and wrong so we can get you to where you told me you wanted to be. And then once you embrace the path, embrace the process, guys, this is where it starts going up, right? And you're going to be like, this makes sense. Did I do that? I did it. And on this linear run up, it's not straight. You're going to take a step back every now and then. You're going to have a bad day. You're going to break your rules. And this is where all those tools that are available to you really come into play. Check it out, guys. I drew this circle at 11:37. At 11:55, the market hit that Fibonacci support. How did I know that was going to happen? I didn't. But I know that because of the patterns, because of the weak triggers, because of the multiple divergences, that this was a probable outcome. And what did that do? That kept me from trying that hope long. And it might even, oh, you guys are going to love this. Let me take that circle and let me move it just a little bit here. To that tail with odds favorable momentum and a clear path, and that pullback to resistance inside of the large trigger to get me down to that area that the pattern told me the market was likely to go with the loss of momentum and multiple divergences. And guys, this is Nexgen. We do this every day. We talk about patterns every day. And the idea is that through repetition, you create recognition. You're going to make a lot of mistakes. And the only way you're going to understand whether or not you've made those mistakes and how to correct them is if you present in class. So I want you guys to give up your shyness. I want you to make yourself a little bit vulnerable. So tomorrow, when I'm teaching class, Atif, Chef, Walker, I want to see pictures with questions, right? Cream White, I want you to keep throwing those pictures in there with questions. Sydney, I want to see pictures with annotations. Guys, I want you to work as hard as I work for your success. Because if you work as hard as I work, you're going to get to where you want to be. Ron, are you kidding me? Everything says up and you go up and make money. Nice job. That's a chart read, ladies and gentlemen. And chart reading is what makes you a great trader. So thank you for your time today. Thank you, everybody, for posting, for